Colleagues, 2-minute warning. Colleagues, you're good over here.
Got it. You got the memo. Okay.
Good afternoon. As is often the case, Mr. Carantonis may be nicer than the chair in this moment, but thank you, because he's connecting with everybody, and it's 1:32, and I'm eager. So this afternoon, we have economic development. Just to name where perhaps many of us are, this is our last work session before spring break. This board member is also eager for spring break. But this is serious work. We cannot fund services if we do not have strong economic growth that tries to include everyone. So I believe this is a little different approach than we've done in the past in terms of our bids, our partnerships. But I trust that Mr. Schwartz has a way of navigating us through this, but I think it's going to go to the Ballston bid first. We do not have slide decks, but that does not mean that we are not deeply interested in what you have to share. And I think that there's sort of a tag team that may happen with the Ballston bid. But over to you, Mr. Schwartz, and then maybe whoever your team.
Yes, and I think we're going to start off with the Ballston bid, and I know Danette Nguyen, who's out of town, is going to be available virtually, and we have Pinky Advani, who's also here. So I'm going to turn it over to Danette, if you can hear us.
Danette,
Yes.
Go ahead.
Good afternoon, and thank you, County Board members and County Manager Mark Schwartz. On behalf of the Board of Directors, stakeholders, and staff, thank you for this opportunity to present the Boston Bids FY27 budget and work plan. We also want to thank the county, AED, and the many partner departments for their continued leadership and partnership. I regret that I cannot be there in person today and appreciate your understanding. Our Business and Community Engagement Director, Pinky Advani, is there today, should there be any technical difficulties as well. Diving into our FY27 budget, our FY27 budget maintains core services while aligning resources with priorities identified in our recently adopted strategic plan. This budget calls for a back-to-basics approach, focusing on strengthening core functions, delivering near-term results, and positioning the bid for long-term success. Our budget focuses on 3 key priorities. First, marketing, branding, and storytelling to strengthen Boston's identity and clearly communicate the district's value. We will continue existing partnerships and programs, including the Buzz in Boston series, which highlights local businesses, and collaborate with county departments to share information and connect property owners and businesses to resources. At the same time, we are advancing new initiatives such as refresh brand assets and stronger digital platforms to expand our visibility. Second, we're advancing education and outreach to Boston's growing residential community and creating strong alignment across all stakeholders. Our efforts in FY27 will focus on listening, outreach, and education through the BIDS Membership Expansion Committee to support Boston's long-term sustainability. And third is placemaking and people-centered experiences that reinforce Boston as a vibrant and welcoming destination. In FY26, we will deliver over 100 days of programming. This includes the Farmers Market, Wind Down Wednesday, local maker markets, and Employee Appreciation Week, which have driven foot traffic and strengthened the community's connection. It also includes working collaboratively with AED on Arlington Tech Launchpad and the Small Business Resource Fair, which connects businesses to federal, state, and local resources. Looking ahead, we will focus on enhanced data collection and short-term activations and year-round programming, including the activation of Boston Quarter. The bid was established to support Boston's long-term vitality as a mixed-use neighborhood with a focus on its commercial core and public spaces. Today, Boston is evolving into an increasingly residential neighborhood. Our priorities reflect this shift as the bid looks to serve its full range of stakeholders, ensure our stability, and knit the neighborhood together. Despite reduced resources, the bid remains focused on delivering high-impact programs and services. We serve as a steward of Boston's growth, working to align commercial and residential interest and support a cohesive, connected community for all that live, work, and gather here. We thank you for your continued support and partnership.
Thank you, Ms. Nguyen. Unbeknownst to you, we have a little, to keep board members succinct, we have a timer. And you got it done well within that as liaison, so thank you. But also want to take seriously the critical role that the bid plays. Your 3 strategic priorities, colleagues may recall that I'm liaison to the Boston bid, and it is a source of quite a bit of pride for me and just an honor to get to work on this. There's a strategic plan that is being developed, and I think that the 3 pieces that you outlined were very helpful. With that preamble, I'll open it up should colleagues have any questions. You don't have to make one up. I think that perhaps, but if you have one, go ahead. But perhaps it's the case that maybe Mr. Schwartz or Ms. Flanagan-Watson can help with this. All the bids, because our broader economy is a little tighter than it's been, are a little closer to the minimum balance reserve that is required than perhaps in the past. Does that seem like an observation that is accurate? It doesn't worry me because the world is as it is. I'd rather admit the way it is. But I wondered if you could speak to if I read that right and if we are still comfortable this is the right policy.
So yes, all 3 of the bids are in adherence of the reserve for delinquencies, and if there are appeals, and that's all laid out in the service agreements that we have with each of the 3 bids, which is a minimum of 5%.
Thank you very much, Ms. Flanagan-Watson and Ms. Nguyen.
I would
Go
also
ahead.
just add, too, that Where the bids are in terms of their assessments is consistent with what we're experiencing overall throughout the county.
Thank you very much. Ms. Nguyen and Ms. Flanagan-Watson and colleagues and the manager, I did not mean to start off on a tougher question, but I also think it's important to just observe truths as we see them. There is a ton of different work, a lot of work going on with the Ballston bid, and it is over to you guys, to you all to see if you have any questions. Mr. Spain.
Thank you, Mr. Chair, and thank you, everyone, for your testimony. Just a few questions just based on your presentation. I'm hearing your priorities, 1, 2, and 3, marketing, branding, storytelling, kind of, advanced education, outreach, some placemaking. Congratulations for what you've done in the 100 fiscal year 2026 and 100 days of programming. I'm just a bit, maybe you can talk me through this. I kind of bucket marketing, branding, advanced education, outreach, which are in 2 buckets here with your priorities, but I see them as one. It feels a bit duplicative. Maybe you can articulate and tell me why it's not. But lastly, I guess my pointed question is, when you talk about enhanced data collection, what does that look like?
No, thank you for those questions, County Board Member Spain. In regards to marketing and the difference between bucket number 2, the marketing that we're seeking for bucket number 1 is enhancing our assets that we have currently. With our strategic plan that was just adopted by our board, we are looking to formalize a bit more some of those assets, whether they be the banners that you see around the district, and having proof points that we could share to other marketing and consultants and professionals. Additionally, the information sharing and education for bucket number 2 is specifically for our outreach with the residential community. As you know, our bid is different in a sense that the commercial residential is not included in our funding. And so we are really utilizing that bucket to pull together information and data to see how we can knit the neighborhood together, as stated earlier, and make it one neighborhood and one Ballston.
Okay.
And then, I'm sorry.
No, go ahead. I'm sorry.
And then for data collection, we're really getting, as I stated, back to basics. And this is, we will be creating a market intelligence log. And with that market intelligence log, we don't have a CRM. And so it's our kind of way to implement a CRM. We are going to be using Excel forms at the moment to identify our contact with businesses that may be moving in, moving out, expanding, touch points that we have with businesses to ensure that we're following through and have the right contact information. And so this way we'll be able to share that market research, market intelligence, not only with our board, but with the county as well.
Okay, thank you.
Thank you, Mr. Spain. Ms. Cunningham.
I have a follow-up question, which I think applies to all the bids and partnerships. This issue of data collection and kind of infrastructure and CRMs, and this may be for the later part, but like in terms of what we're able to do from central office of economic development, what decision support tools, what subscriptions and data, and how do we share that with the partnerships and the bids?
Go ahead, Ms. Flanagan-Watson. And
So-
you can phone a friend or ask to come back.
Yeah,
as
yeah, that's
Ms.
fine.
Cunningham intimated.
Yeah, I may have AED come up to speak to how, from a departmental level, they do that, but I'll just briefly speak to, in the county manager's office through the CAPE team and constituent services. There is a close working relationship and coordination in terms of constituent inquiries. This is a great opportunity for me to plug Report a Problem. Because we are also very mindful of not creating extra systems outside of our systems. And so I would describe this as a multi-pronged approach where it's not only information sharing with each of the bids and the partnerships as well too, but for those items that make sense to report directly into Report a Problem that's constituent related, we prefer to take that approach so we can get it into our system and associated workflows.
Thank you.
Yeah,
AD,
and I'm going
did
to
you wanna
call
share?
Kate up to see if because there's lots of
Angie.
ongoing coordination out of AED, particularly in close coordination with our businesses.
Yeah, I just want to say, I think this is an area of continued interest we have as well. Many of the bids use software such as Placer AI or other programs to kind of track impact and activity. We've been talking with software providers about trying to see if we can get enterprise-wide, county-wide sort of things that we could all share. As you can imagine, their business model doesn't love that, but we're working towards that end. So we are open to and always looking to share some of those sources so that we can all look at the same data and use it and compare notes.
Great. And then my second question is about adaptive reuse, and I think particularly for Ballston, as some of our tired office buildings become really inspired and awesome residences, how does that affect the bid, and are we making any provision for, if you used to be an office building that contributed, do you contribute going forward, or is that a policy area that we need to think about?
It's a good question. I don't know how best to, who wants to take it and who wants to describe it. Ms. Nguyen kind of touched a little bit on this, and I'm happy to further share thoughts as liaison. It's not a secret that the strategic plan is a means, because the Ballston bid is in some consideration of how its boundaries are with residents and commercial. But I will probably stop there because I don't want to speak too much in detail to it, because it's an ongoing process that's there. So Ms. Angie, I think.
Yeah, we've been talking, and I think all the bids are acutely aware of this, both challenge and opportunity, which is that it's a work in progress. And I think with declining revenues overall, I think each bid through their strategic planning efforts are looking at things like, do we expand membership? Do we expand our geography? Do we need to think about raising, taxes? All of those scenarios, I think, are on the table. We're trying to support them with some background data and make sure that they can kind of pencil out what some of those impacts might be. And then I think it will be up to each bid to kind of plan accordingly.
Thank you, Ms. Angie. Follow-up questions. I will share it with everyone. I do think that there's a ton of additional conversation here, and the verb socialize is one I've been using the last 2 weeks. I both want to be transparent about what you shared, but also want to put myself on the hook for socializing some of the work that is ahead. But if it's okay, Vice Chair Coffey, and I think Ms. Cunningham, are you set? Okay, Vice Chair Coffey.
Yeah, and I appreciate Ms. Angie coming to the table, because most of my current question is really not so Ballston specific, but it seems like we haven't had any interest in changing the bid tax rates, at least in the period of time in this budget book, which is about 10 fiscal years, I think. How do we even go about having that conversation if we were to want to? I'm not saying that we are at a point where that is the next step, but it just seems like, especially if it hasn't really happened in so long, I don't know how we even begin that conversation.
Sure. Not an easy question, but go ahead.
So we do take our lead from the bids on that conversation, and they can speak for themselves, but I think that their intent is to try to have some stability in that, and they try to adjust to the circumstances. I don't think they've ever ruled out the possibility of either lowering or raising the rate when there's, I'll say, generational kinds of issues that they need to deal with. But it's not off the table. And then also, I'm not trying to be too clever here, but the county board certainly has the ability to, on its own, push for either a higher or a lower rate. I think for a lot of the businesses and sort of residents involved there, they're familiar with those rates, and that's why they've tried to keep them steady. And then I don't know if anybody from the bids would like to speak to that.
Ms. Nguyen, not necessarily trying to put you on the hook for the base in addition to the rate is a big question with respect to the Ballston bid. And did you want to add anything, Ms. Nguyen, or no? It's okay if you don't.
No, I think County Manager Swartz and County AED Acting Director Ainge was incorrect, were correct in their statements. I think for the Ballston bid, we have not explored increasing the tax rate at the moment because of the fact that we're currently exploring what an increase in terms of membership could be, whether that is expansion of our boundaries and or the inclusion of, a commercial residential base. So at the moment, while we're exploring those options, we have not taken into consideration the increase.
Thank you. And I guess kind of the follow-up question to that, obviously, if there were to be any kind of tax rate increase or change, it would have to come through the board. But does adding or changing the base of who's included in a bid, is that something that the board ratifies or is involved in? Or
Yes.
yeah, can we talk through a little bit how that works?
It's a tricky topic. I guess my perspective, and the subject matter experts will talk about, it has to happen planfully. I think if we think about some of our efforts in Richmond on affordable housing, unfortunately, seeking partnership is super important. And so one of the questions I just emailed within the last 24 hours from the Flanagan-Watson was timing on such a discussion. And this is simultaneously not state secret, but it also hasn't been discussed in this venue. And I think all five of us would understand that we want it to be net economic growth incentives. We're not trying to tax, or increase the rate in any way. But maybe I've said too much. I hope.
Yeah, I will briefly respond by saying that there is a whole process that's laid out from an initial data collection phase, getting input from stakeholders, and then a whole series of other steps. We are happy to follow up in a written response that lays all of that out. That is the approach that we followed with the expansion of then the Crystal City bid, which is now the National Landing bid. So happy to follow up with a written response that lays all of that out.
Thank you, Vice Chair Coffey. So same topic. I don't know if both Mr. Carantonis and Ms. Cunningham are.
Could I just clarify in that written, could you also mention the fiscal year 19 one time for Ballston? I think that's the only time it's been changed in the last 10 years. So when you do that, write up. Thank you.
And we will be, go ahead.
Well, I'll just say thank you. I'm totally fine with the written follow-up. I think it is just being planful, and I don't know that with such a new young board, I don't know that we've gone through this process as a collective. And so if it is even on the table, I think getting us that information, especially I think if we're not doing it now, so that we can have it and understand it such that if in a year, 2, 5 years, it comes to us, we're not surprised or learning as we go. I think that's just kind of where my mindset is.
Thank you, Vice Chair Coffey. I would say that it may be, we don't need extra meetings, but it may be that the right tool is a meeting in addition to after the written follow-up, a meeting in addition may be useful. I do not understand the details of this as well, but I am seeking to align and support and work with Ms. Nguyen and Ms. Avanti and the Advani. Mr. Carantonis, I know you have some thoughts. Go ahead.
Yes, first of all, Ms. Coffey is absolutely right in thinking forward about, what bids exactly do, and what's the return on this investment, how the members, the economic factors of a bid align, and how they leverage the business improvement district. The characteristic of Ballston is one that's very interesting because it is really very selective. This is not it's not a very well distributed burden of carrying the bid. It is only carried by a certain type of entities who had office space, etc. There are bigger economic factors there who are running a booming business with housing, who benefit from the bid's work, but are not asked to contribute to the bid's to the bid's budget and to the bid's governance. And it is absolutely clear it's not just about what the tax rate is, it's about what our policy is, what we want from bids. We can show in Arlington very successful business improvement districts, I believe. I mean, we can really show them. By the way, Ballston is not unsuccessful. It's just, in my opinion, not as well balanced in the diversity of economic actors as the current situation asks to. So I think that what Ms. Coffey puts on the table is absolutely, it's a very good question, and it needs to have a policy response. I have a different question about you. So two things have happened in Ballston that I believe last year were very interesting. The number one is we have certainty about the future of the capitals. The other is that the Better Bus Network has activated and has stabilized the Ballston transportation node, the Ballston Station transportation node to a completely new, to completely, you know, it's one of the best functioning and you know, it has a very high ridership, et cetera. So around that, we have seen now new retail. It's a very revitalized commercial environment. And what concerns me is that this doesn't translate into better, you know, in a higher attractiveness of the rest of the office assets there. So there is kind of, for me, I always see that as a kind of a dissonance between a very successful retail environment in Boston, very little vacancy rates as far as I can see. It is sought after, but once you go in, you have a phenomena of properties that have been chronically not, like Boston Exchange, for example, have been chronically haven't been able to attract tenants. So is there any need that the bid can articulate from us to look and to fine-tune CMRI to be able to respond to the specific market of Boston, which has been always the weakest office market in Arlington?
Don't know if that's a question for Ms. Nguyen or Ms. Angie. Perhaps it's a question that maybe follow-up is the best way to do it. I do think that.
Oh, yes, if there is no,
Sure.
you know, the simple answer, then but I really think that in Boston we have some real gems
Sure.
that are very, really resistant, despite the fact that, you know, on the street level things are actually look good.
Well, I think that's a fair additional point. I guess let's, with your understanding and staff leadership, let's follow up on that question if that's okay, because I think it is a pertinent one, and you know, true to form, your command, the economic details there is important. So I would ask that we follow up on that one for sure, and then there's a separate policy question that's also for follow-up. And then colleagues, certainly don't take my word for the details of this. I do think it's very likely, but open, that after the budget is done, there may be a desire for some meetings that would explain this whole piece in greater detail. So I don't know if there are any other, I'm hoping not to over-invite, but I do want to thank Ms. Nguyen and Ms. Advani, both of you, for being here. Both of you are also residents of Ballston, which is super as well. And so with that, anything else, we will go on to the next bid, if that's okay with everyone. I'm not seeing lights, not seeing concerns. That's where we'll head. Next bid, I believe, that's coming up. Thanks again for covering the tech contingency, Ms. Nguyen and Ms. Advani, because it is a real thing. When I was teaching, every time I had a lesson that involved a video, it did not come up. So the next bid that we have ahead of us is the Roslyn bid. I don't think we need an extra intro, but I'll certainly look to Mr. Schwartz if there is one for Ms. Burek.
No, so we've already talked to the CEO of the Ballston bid, but now we're going to talk to the president of the Roslyn bid.
Thank you, Mr. Schwartz. Ms. Burek.
Red means go.
There
Red
you
means go. You would think it would be green.
You would.
Yeah. Chair, members of the board, thank you for the opportunity, and special thank you to Shannon, who serves on our board and executive committee, as well as Kate and AED and all the variety of county departments that we work with. We wouldn't be successful without all of you. This past year for us was really about delivering visible impact in the public realm, while we also strengthened our internal focus, trying to position the bid for long-term success, which I think is really important in this time frame. So our work plan goes into detail across all of the program areas. So today I'm just going to highlight a few key priority areas that'll kind of delve into what we accomplished as well as what's to come. So the first priority, maintaining and activating Roslyn's public spaces. So this remains a top priority for us. And we take a cross-departmental approach. We've enhanced public spaces, we've delivered creative marketing, we've hosted more than 80 events with 15,000 attendees through Roslyn. And so this work really is driving the foot traffic, the visitation, engaging the employees, and really just strengthening community ties. So we will continue that work. And I wanted to bring to highlight a really great example of this, and that is the Now, which is our pop-up temporary park, which earned a Design Arlington Award. And this really is, I think, demonstrates the ROI of placemaking. We took an unactivated site that was reawaiting development, and we turned it into a space that now daily hosts residents, visitors, employees, and so now it's just become this vibrant place. And we did it through support with Monday Properties, AED, Nestle, Friends of Urban Agriculture. And really, this enabled us to achieve multiple community goals in one project. So we're doing employee engagement with Nestle. We're doing a community program. We are donating produce that we grow on the site to Plot for Hunger to help our neighbors. So it's just a really, oh, and there's a dog run for those of us that have our four-legged friends. So looking ahead, placemaking will remain a priority, and we're going to do a spring refresh of the Now, and we're going to continue to work with AED to expand placemaking because that is one of the things that's in their strategic plan, so we'll be working with them on that. Second important priority area is public safety and hospitality. Our core ambassador and safety ranger programs are playing a critical role in maintaining a clean, safe, and welcoming environment. Over the past year, the bid delivered more than 1,500 patrol hours. We did 100 safe walks, and we expanded the program's focus to include curbside and traffic management. During the pilot period, we had over 1,000 violations that we noticed, and during the period when we actually went in with our rangers, we had 630 people who voluntarily moved along when they were told to do so. So I think it's a really interesting thing that we're going to want to bring forward into the next year. And so we'll continue to refine that program. And we do hope that ACPD resources will enable even more enforcement. This is something that we hear on a daily basis from our tenants and our residents. Third priority is strengthening the organization so we can continue to deliver impact. This was a big area of work for us this year. We modernized our bylaws, which was no small feat. Thank you again to Shannon for serving on that task force. We prepared for a lot of board transitions, probably the most we've ever had in my tenure. And we undertook a major IT infrastructure upgrade, which was not my specialty, but I dug in. And we are now on a much more collaborative AI-based tools, which I think are really going to help our team be more efficient. And all this together really strengthens governance, improves transparency, and ensures that we can remain effective. And then finally, our commitment to Roslyn's long-range priorities have not changed. Gateway Park, expanded river access through the boathouse, and core transportation investments. These are essential to Roslyn's long-term economic vitality, and so keeping these projects on track really is important. We're really proud of the impact that we made together this year, and we're planning to do even more of it in the year to come. So thank you.
Thank you, Ms. Burek. We have, I'll open the floor. Those pieces all resonate with me, and mindful that our neighbors most in need, it is important to have a welcoming environment for business, and so that approach resonates as place activation and the organization as a whole. I don't know if colleagues have questions. You don't have to, but you're welcome. Vice Chair Coffey.
I'll just share, some compliments. I feel so lucky to be able to liaise with the Roslyn bid, and in particular, I think the Now is such a good example of kind of making lemonade out of the economic lemons that we have right now, because there's a huge vision for the future of Roslyn, and I think we all still believe in it and believe in getting there, but also we can't neglect what the state of things is for residents and our businesses today, and being able to find those interim creative uses, I think, has been a real game changer for Roslyn, because it keeps things activated and it keeps them, pretty while we wait for big construction trucks and cranes to move through. And, one day when it's all completed, right, like everything will be great, but it's also important to make sure that we don't just wait for one day. And so I really appreciate that you all are wanting to do more of this, but how hard it can be for us to accomplish. So I would just invite an opportunity to share.
We started this project over a year ago on a different site completely and went through the process. It was the Snell site. And what we found was that there were just too many hurdles between stormwater management and, permitting, zoning. It would have caused the property owners to have to do a site plan amendment. And then when they wanted to build, they would have to come back again and do another site plan amendment. And so there were just a lot of challenges that we didn't anticipate. I will say we've learned a lot since doing that. AED was a critical partner. Both Shannon and Kate really handheld us through the process. And I think, that's one of the things that we've talked to Kate about is really taking forward some of the lessons that we learned so that we can bring them into other projects and really expand what we're able to do. I will say when we moved to the Monday Properties site, that was much easier because it was private property, but there were still quite a few challenges and hurdles that we wanted to get through. I think signage is one of those things, really being able to brand the site as to what it was so that when passerby walked by, they knew that this is a public open site, please come in. And we wanted to also recognize our partners. Nestle contributed financially to it. Monday Properties let us use the site. We wanted everyone to know that Friends of Urban Agriculture were doing classes with our students. And so things like that I think we can definitely continue to build upon. I think this really provides a really great success. And we've got all of the measurements with the foot traffic. We do have Placer AI, so we've been tracking the influx of foot traffic since putting that there. We are looking at metrics like, the amount of trash that was there and that's no longer there because the park is being maintained. So I think there's a lot of lessons learned that we can pull forward, and that is one of the things we've put in our work plan going forward is how can we be a partner to the county in streamlining things. I think a lot of this is really inherent in the work that, Mark has directed with CMRI. And I think continuing that work has been impactful and will continue to be impactful.
Great. Thank you for sharing.
Thank you, Ms. Burek, and said like perhaps a liaison. We should have some friendly trash talking about who's the best liaison to which bid. Mr. Spade.
Gotta love those liaisons. Thank you, Mary Claire, for what you're doing, and thank you to our liaison, what y'all are doing, and what I believe one of the premier locations in Arlington that has significant upside and enormous potential as we think about the future and the opportunities with waterfront and all those things. That aside, in your testimony, you talked a little bit about the safety rangers, and I know we spoke sparingly in the past. Can you talk through any challenges that may be going on with if so, tell us a little bit more about what the safety rangers are actually doing. If they're, are they being paid? And if so, what does that pay like? And then talk us through this, there's a decrease in your revenue, of course, that's here. What are some of the factors perhaps that you're seeing that have occurred that we may be able to mitigate in the future to get back to some really good numbers?
Yeah, it's a good question. So this was a new initiative for us. We already had an ambassador program in place. So we were already doing the clean, the safe, the hospitality. And what we recognized was we needed a little bit more of a focus on our homeless population as well as panhandling. So we added a outreach worker who is trained in doing outreach, and we coordinate very closely with DHS as well as Path Forward to help that piece. So that's been really helpful having that as sort of part of the program. The other change that we made, and we did this very intentionally from a budgetary perspective, rather than launching a separate safety initiative, we actually brought it into the ambassador program. So they're actually cross-trained. So to the degree, so our ambassadors are doing double duty of helping out with events as well as doing the clean and safe and the hospitality. The safety rangers are specially trained and they have a higher degree of training. They actually follow the code for Virginia because that's very important that they have those certifications and that they know how to conduct themselves. But they're doing de-escalation. They're able to respond quickly. They put problems in the report a problem tool that Shannon talked about. And they're highly trained. And they do have a bit of more of a tactical uniform. So our ambassadors are purposely very friendly in the purple. Not that the safety rangers are not friendly, they are, but the uniform is just a bit more tactical. And I think that has enabled us without any true authority to move people along. And that's, we actually in-house, it's called our Move Along program. We need to find a better externally marketed name for it. But they've had great success. We've had an 85 to 90% success rate. They move people along on foot as well as with a branded truck. So I think those two efforts combined. So they're doing safety walks. We have QR codes on all of our trash cans. So people can just press the QR code and say, hey, it's nighttime, I'd love a walk to the metro. Safety rangers will go and do a safety walk for them. And then they do a patrol, regular patrols through our hotspots. So then they can report problems. And that works hand in hand with our ACPD off-duty program. So on the days that the ACPD is in the neighborhood, our ambassadors and our safety rangers, if they spot something, that means it's much more quickly handled and dealt with. So the whole goal really is to prevent escalation, whether it be from someone who's just merely panhandling or, what we call a nuisance type of a thing, up to someone who really needs help. How do we get them the help that they need to something that's truly like escalating to a police matter?
Yeah, I think that's a model that we need to look at more closely across Arlington, perhaps. Could you talk a little bit about the decrease in revenue?
Yeah, so the good news is that the bid had been very strategic in putting aside revenue for strategic projects, and then we were able to then make a decision. So we did use carryover funding to fund the safety program. The goal would be that we're doing much more targeted projections, and so the hope is that we will be able to incorporate that cost going forward. But last year it was handled out of carryover, so we will need to figure that out going forward for 28.
Thank you, Mr. Spain. Mr. Karantonis.
Thank you. I have to tell you, I'm spending a lot more time in Roslyn than I used to, along the Blue Line in general, so for National Landing folks as well. It is absolutely, for me, it's a very happy experience every time. I really see the improvement, and most importantly, the investment in walkability that you have been doing, and because SAFE and everything, and the park, and all these investments are basically in creating the feel of a neighborhood again. I agree with you. Wayfinding is somewhere stuck in the past, and we haven't updated that. So this is a major thing. How Roslyn welcomes the visitor, especially both from the west as well from the east, from DC. One thing that concerns me though is the following. Now you have brand new assets like the new Hilton Hotel, etc. At the same time, our region is now struggling with attracting visitors, etc. How does the bid position itself to do that? I mean, events, the placemaking strategy there.
Yeah, we actually partner quite a bit with our retailers. So for example, for the upcoming Jazz Fest, we're planning a promotion for the Hilton to do a staycation. And then we'll sort of use our marketing and ad dollars to get that out. And we've actually increased our marketing efforts. So we are now pulling people into Jazz Fest from Philly, Richmond, as far as New York. People are actually coming in for the Jazz Fest. So we now want to see if we can convert that into hotel stays, retail spends, things like that. So it's definitely something that's on our mind. We usually have a full suite of services we offer any new business, whether they be commercial tenant or retail tenant, where we're doing grand openings, figuring out how we can support them in the neighborhood. So engagement is definitely a piece of the work that we do, and I think it does help to drive traffic to those businesses. I think what I've heard is the Hilton's doing very well in terms of their room blocks. The breakfast isn't as much as they had hoped. They were kind of expecting the hotel would drive the breakfast for the Locket, which is the restaurant that's in it. But the rest of the lunch, happy hour, and dinner are all doing quite well.
Yeah, this is our best 5 stars at this point. For me, the second thing is that together with that, what I heard from, so your investment in walkability actually incentivizes also the residential part of Roslyn, our neighbors there, to have stronger opinions in things and be more, forward-minded in these things. So the thing that I heard mostly is that they think that we have to manage better the pickup and drop-offs, the Grubhub business, et cetera. And they also think that, business deliveries should be managed in a better way. I know that the number one place where I would ask about these things would be the bid first and then everybody else. So is that something that you work on, or is that something that's present in your
100%. We hear the same things, and that's actually why we pivoted the Safety Ranger program from being strictly security to being more tactical on the street to help with curbside management. Curbside management in ultra-urban environments like Roslyn is a challenge. There's just no question. We've had the transportation leadership team out to look at it to sort of figure out, are there anything that can be done there? Are there technologies that once Virginia state code allows for them that Arlington can employ for double parking, idling, some of those things? So this is absolutely a priority, and we're continuing to refine that program over the next coming year to try to work on that. But it's definitely something that we need to do in partnership with the county.
Thank you.
Thank you, Mr. Carantonis. Ms. Cunningham.
Actually, just on the parking, I think our parking fee, our fine is still only $50 and hasn't changed in a long time. Is that something, not for this session, but to tag for later? Could we think about how one does that, and whether, especially in the urban cores where we're having really a hard time with pickup drop-off, we can change that?
We can look at that. There are some restrictions that we have about how high we can raise it, but I'm sure Mary Claire won't mind if I piggyback on her last answer. Raising the fines, we really do need some assistance, again, from the General Assembly on allowing us to do more when it comes to this curbside management. We were disappointed with what happened with our legislation this year, and also we've been also working with COG on reciprocity. I think that came up previously about doing enforcement. But I know the bid does its level best, but there are a lot of cities in the United States, and we're working on this in our Transportation Futures Plan, that have full offices that deal with this, logistics management and deliveries. Mm-hmm. And, Arlington is, I think, pretty far behind what other urban jurisdictions are doing. So it's not just going to fall on the bid for us and this board when we get the new Transportation Futures Plan to focus on that.
Great. Thank you. Then 2 questions. One is about kind of comfort, heat, and trees. I know you guys had been working on some greening elements and trying to get some natives in there, even though it's by nature kind of a concrete environment in some places still. How is that going? Are you getting what you need from the county? Is there anything you need from this board?
Yeah, so it is definitely one of our priorities. One of the key ways we tend to do those are through redevelopment. And so I think continuing to work with the planning process within Arlington County as to what goes into site plan conditions in terms of what the sidewalks look like, what the tree canopy looks like, I think is really important. We have really good opportunities coming up with the 1400s redevelopment. Their landscape architect has put in all of those types of things within their redevelopment. So I think our most impactful process is probably through the planning process of making sure that those things are embedded, and they are, but that's probably the most impactful. And then the bid can come in as a secondary and add in additional things. So we will continue to do that work.
Great. And then my last question is around the Keybridge Marriott site, which is technically just outside of the Roslyn sector plan. How have you engaged there? How are you thinking about that opportunity along with the boathouse and the bids efforts?
Yeah, so that is a generational site for sure. And I think it's very important that, and I think the county will do a very thorough process looking at the uses, looking at transportation in particular, as we know that area is pretty dense there. So we're very excited about the possibility. We think it's very important to just do a really thorough look at that, about what's possible there. We have engaged with the developer and their finance arm, Quadrangle and MAC, so we kind of know what they're planning for, and the bid has started to engage with our other property owners and other stakeholders to try to understand what they feel. So we don't yet quite have an official bid position. We have staff's position on what we think we'd like to see there, but we will continue to work to hear from our stakeholders to make sure that we're reflecting back what they would like to see as well.
Thank you.
Thank you, Ms. Cunningham. We will move on to the national landing bid. Thank you very much, Ms. Burek. Mr. Mandel. Changing of the guard.
Good afternoon, everybody.
Good afternoon.
Chair DeFronti, members of the County Board. My name is Rob Mandel. I'm the Deputy Executive Director for the National Landing Bid. And I'm pleased to be here today in Tracy's place. She's on leave this week, so a pleasure to be here before you today. This year actually marks a milestone for the bid. It's 20-year anniversary. This milestone reflects both the transformation of National Landing into a more competitive and resilient economic center for the county, but also its evolution as an organization into a more strategic partner to property owners and to the county. We recognize that the county is navigating a challenging fiscal environment with difficult budget decisions and impacts to residents and businesses ahead. In that context, our partnership will be even more critical as we work toward a shared vision for a resilient and competitive national landing that supports the county's long-term economic strength and fiscal health. We're grateful for our continued partnership with the county. Special thanks to Shannon and to Kate for all of their work in helping us be successful, their guidance and their leadership. This partnership has translated into meaningful progress over the past year, and I'll go through a couple of those successes. Together, we launched the National Innovation Quarter in partnership with AED, AEDP, JBG Smith, and others, which is the culmination of years of the bid's effort to position the district as a hub for technology and innovation. Strong advocacy for key transportation investments, including CC to DCA and the Virginia Railway Express Station. Collaboration on open rewards to support small businesses throughout National Landing in the county. Close coordination with the county on snow response communications and issue resolution, and integrating placemaking into the 12th Street Transitway construction site. We've also launched major marketing campaigns that have driven unprecedented earned media coverage and increased brand recognition for National Landing. We've established the bid's data dashboard as a resource for market intelligence, initiated a comprehensive brand identity update, and have delivered over 100 community events. Looking ahead to fiscal year 2027, we are focused on building upon that momentum by developing and implementing a new strategic plan to better meet current stakeholder needs, executing and integrating our refreshed National Landing brand identity, and continuing to explore clean and safe and ambassador program solutions. That was a key priority in our last strategic plan. Deepening engagement with residential, retail, office, and hospitality partners, and continuing to double down on placemaking, partnership, and collaboration. As National Landing continues to evolve, the bid remains committed to being a strong partner to the county, helping to ensure the district remains vibrant, competitive, and a key driver of economic resilience. Thank you.
Thank you, Mr. Mandel. We are your chair has not budgeted a timeline that is super realistic as far as, so we're supposed to finish AED as well at 3:05. So I will ask that folks I encourage, if you want to ask a question, do it. Maybe ask that we follow up, but at the same time, I don't want to steal your thunder. But I don't see any questions at the moment. And now I see Ms. Cunningham. Go
I'll just do
ahead.
a comment. Just a huge thank you and a celebration of the bid here. I'm the new liaison. I'm really excited about it. And 20th anniversary is nothing to sneeze at. So it's going to be a great time, and everybody should go spend money in all of our bids, but a special national landing.
Thank you, Ms. Cunningham. Mr. Carantonis.
Thank you. Thank you, Ms. The bid has also, the national landing bid is a heavy investor in walkability and a completely new feeling for a neighborhood. What I find mesmerizing, I'm honest with using this, is how diverse Crystal City and Pentagon City have become and how they keep their. I mean, few people realize that, for example, the percentage of black and brown population in Crystal City is almost twice the regular percentage in other parts of our corridors. It's about 20%, right? We have one of the highest Asian American population. So the economic activity is attracting a very diverse workforce. It builds a very diverse place. So how does the bid respond to that? Because I see that as an asset and as a huge opportunity, rather than anything else. I mean, for me, it's good news.
Yeah, thank you, Takis. It sounds like you've been on our data dashboard, exploring our detailed data. Obviously, being a district that's welcoming to everybody is a core part of our values as an organization. We have our equity plan that we established back in 2021, I believe. So it's no surprise to us that we've become that. We've achieved that as a district. It's something we're very proud of. If you recall, I think when Amazon was exploring the diversity of the workforce here in Arlington and the region was a key part of their decision making, and I think that bears out on the micro level in national landing for sure.
I'm saying that also because there is a role for us here. I mean, there is a role of thinking about the assets, the civic assets that need to be there. Anything that is recreational, libraries, assets. We have invested a lot, like, for example, in recreational assets, the Longbridge Park, the Aquatic Center, and so forth. We have invested a lot in transportation assets, et cetera. But I see here a completely new game for everybody to follow up on that. This is one of the, in my opinion, one of the sub-areas in Arlington that has exceptionally strong bones from the point of view of demographics. So follow up on that. How do we digest, how is the bid digesting the federal problems that we had? Because it's also the home of many federal employees who lost their jobs. And it's not the first rodeo for national landing. It is the second one. So how is this going?
Sure. Well, I think the impact of federal decisions is not something that's new to Arlington or to our area. Excuse me, BRAC being the impetus for the formation of the bid in the first place. And I think out of that really came a lot of the answers that I think we're still utilizing and leaning on for the next phase of National Landing's life cycle, which is diversifying the economy. And I think that's where the National Innovation Corridor really plays in a big way, is really investing in our amenities, or I'm sorry, our assets as a talented workforce with a strong connection to technology and innovation.
Thank you. Thank you, Mr. Mandel, and I will leave the opportunity open to follow up.
Sure.
To all colleagues, really appreciate your presentation, and sorry we're sort of moving breakneck. We will go next to Clarendon Alliance. Mr. Daly, I believe.
Hello. Good afternoon.
Good afternoon.
Good to see you all again. I'm here in place of Casey Nolan, our board president. He is also away. This kind of aligns with a lot of that spring break travel, so I'm happy to represent here. I've got some stuff here prepared. We know this is a difficult budget year, but page 800 something in that proposed budget has us kind of experiencing a 28% funding cut over comparable funding that we've had for the last several fiscal years. I think there's a little bit of a disjointed piece, just kind of process related, because some of that one-time funding has occurred for 3 years, kind of out of an acknowledgement that the work that we do is important and it's ongoing. It's not short-term. It spans multiple years, and that kind of recurring investment is really important. I want to just share a couple of comments that from within the county departments also kind of mirror that. First, the Dish with the Commish fun events. I attended that last week, and Kim shared that when our businesses do well, the county does well. And I think with the commercial vacancies that we're experiencing, that's obvious, right? That's kind of led us to where we are today. But maintaining all of our retail and our ground floor businesses to help bring some of that back as the cycle progresses is really important. But I also want to share some of Mark's comments at an Advance Arlington event. That kind of puts us where we are, because I think it's an important framing.
Mark didn't think anyone was listening.
We were listening because we want to understand and do our part to help Arlington thrive. But Mark shared that it's a serious problem when you take something that should be ongoing and you use one-time money to support it. It's really unacceptable. You've built in a structural imbalance into the budget. And when you step back and you see over several years, there's been an actual structural growth in what's going on, you need to move your funding source from one time to ongoing, because people need to be able to plan and rely on that. Our budget, our operating budget, if we can maintain it at $200K, is 5% of what Roslyn has to work with each year. But the community and oftentimes the board has equal expectations about what we can do. I said our work is long-term in nature. Sustained, predictable funding is essential. AED relies on us to help extend their work within our specific footprint. There's kind of been frustrations when we're not able to participate in ribbon cuttings and similar events and similar support events, but we just don't have the resources and the people to do it where we're currently funded. That said, our organization has not taken the investment over the past 3 years lightly. We have completed a strategic planning process. We have begun to shore up some of our weaknesses. Some of you may recall I kind of stood in as an executive director ad hoc right after COVID for a couple of years just because we didn't have the funds to get a market viable salary together as things were changing. Well, over the past few years, we have built on our events. Clarendon Day is often viewed as a one-day party, but it's the day that many of the businesses in our footprint get to meet some of their new customers for the first time. Circa can sell some Wagyu beef sliders, but also invite people to come back for a free dessert and turn them into ongoing customers. That's just kind of one example of how that event reaches beyond that day. And so we understand that public events are very important. We've focused on those. We've optimized Clarendon Day to become very profitable, and it's helped us fund new events over the past few years. We have the Music by the Metro concert series, which creates a sense of place in May, and we added the Light Up Clarendon event in December, which sounds like one event, but it was actually an initiative that resulted in lighting of that park for the entire season through February, creating a sense of space and place and, just celebrating the area with lighting that you often see done when you have funding at the level of the bids. We're going through the AED partnership evaluation process, and that remains ongoing. But one of the recurring things that we've heard from the county board is that our organization needs to work on generating some of our own revenue. In fiscal year '24, our self-generated revenue was $75K. This year, with 3 months to go, we're at $132K of self-generated revenue. We've pretty much batched the one-time funding from last year, while also introducing another new program that's happening in April called Clarendon Fit Fest in partnership with George Mason University and Pacers Running. Total memberships for our organization, we are on the membership model. Our memberships are up over 40% this year so far, and we still have 3 months to go. And all this revenue numbers that I'm sharing right now is as we're starting our sponsorship development season for Clarendon Day and our other events and programming. One of the other challenges that's been addressed is, our staffing support, but we are in transition right now, as you know. We've leveraged a third-party firm to help us identify ideal, uniquely and specifically qualified candidates. And we're less than 2 months from needing that change, and we're already through second-round interviews and visiting with our final candidates in person next weekend in the beginning of April. But we've also diversified our staffing support, so we did not have a complete shutdown during a transition period of time. Our communications are supported through third-party support for our social media. We also have part-time admin support who has been bridging the gap on membership to make sure that that doesn't go unattended. But she's kind of a rock star. Shout out to Carrie. She's been helping us with our sponsorship work in the meantime too, so that doesn't just remain stagnant. So we've also been fortifying our board with, we did a full board kind of matrix and analysis, and we just recently added Katie Anshin from MoCA to bring some more arts expertise to our board. We're also leveraging partnerships to get in-kind support that multiplies your work between George Mason with just being able to use the space to have events. They also provide us space for monthly meetings to help minimize our costs. We work with community partners like Comcast to get event banners hung. And the folks at the Crossing have been a very big help when it comes to communications, strategy development, as well as presence at some of the events that they hold. So we're asking you to maintain us at 200K. We had asked for more for this year, but we understand where we are. 200K is where we were last year. We're facing more than 11% increases in public safety costs for some of the biggest events held in Arlington. We'll figure out how to, shoulder some of that, but 200K is not a lot to support the business and the activity that happens between Virginia Square and Courthouse. So we ask you to think about that very carefully and, think of it kind of like the oxygen masks on the plane. When we're in trouble and it's, you got to put the mask on yourself first. You got to make sure that you keep everything going and that you don't retreat backwards in the short term.
Thank you, Mr.
Thank you.
Thank you very much, Mr. Daly, for your ongoing commitment to the Alliance. You have been doing the work, and we're very grateful, and for your specifics on your presentation. I will open it up to colleagues. I think that you're aware of the tension, both of the planning certainty that you wish is a reasonable request, and I appreciate you sort of mentioning the hard work that you're doing on the leadership transition. And I'll just sort of leave it there, at least for my part, and I'll share it with colleagues if folks have questions. Mr. Karantonis.
Thank you. I mean, it's not a secret. It's known that I have the opinion that our core policy with our partnerships is to support their ability to operate. And the dividend of that is their ability to operate. So to do the placemaking and to engage with constituencies and to engage with retail and to engage with the civic sphere that is surrounding that. And there are a few places where this is not, where it's more, Clarendon is a place that it's so visible that we haven't been able to support Clarendon Alliance in the recent times. And we know that this can work better because we have the past and we understand that. So the idea of supporting the budget of Clarendon Alliance to be at 200,000 was the idea of bringing it back to a condition where you would have a fair chance to actually do what we spend the rest of the money in.
Yes.
With other words, what I'm saying here is spending 145 is going back to the ICU. And it's just keeping you alive without actually getting very little out of that. We have seen the last 2 years that getting you out of the ICU has actually produced very good results. So there is, and there is definitely hard-earned, even monetarily measurable dividend out of that from business attraction and more sales. So my question for you is the following. How do you engage with the business owners, the new memberships, the increase in memberships, the business owners from which we expect some, to see again that Clarendon Alliance is a good partner, is a partner that is helpful to them, that that the events, even if it's one signature event, it's not only one, there are 3 signature events. How do you get through the exercise of getting their interest and engaging them again?
So that is already in works. And a case, an example is Wood & Iron just opened, Wood & Iron, that's the right name? Yep. Wood & Iron just opened at Fuse. We've involved them in the Clarendon Fit Fest event. And our admin help and one of our board members met with them on Tuesday. We already have a membership. Like, we are already engaged with the newest business there. And that is only possible because right now, through one paid admin who's currently supporting us she's engaging and she's wonderful and she was able to help in that way, and the engagement of one of our board members. We understand that this work has to be ongoing. It has to be tested. What's the best way to engage and talk with these people? We're not waiting until the next person is here to start some of that. It's still happening. And so, does that?
Thank you.
Yeah.
Thank you.
For me, this is very critical, colleagues. The investment in our urban alliances has to be meaningful in order to be gainful. So that's the bottom line. It is a very difficult budget year. Everybody understands that. But if we spend any money, we have to spend it right. So thank you.
Thank you, Mr. Karantonis. I saw Ms. Coffey first, but Ms. Cunningham is this side. Do you care? Ms. Cunningham. Go
I
ahead.
would just reinforce what Takis just said, which is I think we shouldn't be moving backwards in a corridor that is needing our investment.
Thank you, Ms. Cunningham. Mr. Vice Chair Coffey.
Short and sweet. Yeah, I'll say in a longer way what Ms. Cunningham just said. Particularly, I think because Clarendon Alliance's model has become so much about that membership and getting businesses to say it's worth a little bit of our investment to partner and be involved in this. I really worry about what it says about those partners' ability to trust that it's worth making that investment if we're not stepping up and showing that this is going to be a continued long-term thing. Like, I just don't want, after all the hard work that has gone into getting the membership built back up and to where it is, kind of based on this value proposition that we are going to offer things and we're going to have someone there for you to help and all of that. I would be really worried about the signal that it sends if we were to back off of that. Because even if it is, we're backing off for 2 years while we, deal with some other budgetary issues, the next time we come back to invest, like what makes those partners think that 2 years from then, we're not going to do the same thing? So that's where I'm at on this personally.
Thank you both. That prompts me to conversations with the two of you that I will need to have as we work forward. But I think you read the tea leaves well enough to know that if ongoing is not plausible, one time is going to be highly of interest to me. And that does not mean your arguments weren't effective. Mr. Spain.
Yeah, I just
was covering this year. Sorry, go ahead, Mr. Spain.
Thank you for your presentation, and good luck on getting the next executive director. I know you're going to find a rock star there. I'll tell you just for what it's worth, and I really don't have a question as much as I just want to, in this moment, have us think about where we are investing in sharp contrast to the other entities that have come before us, and thinking about what Clarendon brings to the table, and we hear from others, but also think about where we're putting our money, right? I know what the budget says. I see what's projected. But it's a pretty significant story when we look at how much we're actually paying the Alliance, but how much we're really paying overtime for policing in Clarendon, which is double that, if not more. We're paying them more for safety than we are to paying for you to do the baseline for operations. It's just, it seems conflicted, right? And I think it's not just where you're at, it's about almost a value type proposition where we put our resources and money. Because what is it yielding? We want Clarendon, which has a lot of potential, right, to do some great things. But I think this board is going to have a conversation, and I'm willing to be a part of that about, because it just don't look right in my eyes. We invest more in overtime for public safety and policing than we were to pay, not even to your ass, to do baseline operations. So I'm just saying that for what it's worth, and it just doesn't require any comment. It's just something that's very notable to me, and I think the public should also be made aware of that. Thank you.
Thank you, Mr. Spain. We'll end where we began, which is a big thank you. You have given your heart and soul, and your wife may not always be most happy with us for how much we've asked. I can relate to that. We have a Clarendon resident. Go ahead.
Well,
Mr.
I'll
Vice
just
Chair
say I was a little worried that when the name 10 came up, it was going to say acting executive director. So I'm happy to see you here, but I'm happier to know that we will hopefully not see you next time.
We worked hard to make sure that didn't have to happen again. And so we have the support to make sure that we're still going. So thanks.
Very diplomatic. That's perhaps why you are staying married. So if I can editorialize. Onward to our next, colleagues. We are Columbia Pike Partnership, and we are traveling down the super late, but that doesn't mean don't ask, just efficiency is brevity is the soul of wit, or whatever platitudes I can share. Mr. Schneider.
Wow. Yeah, this is all. I was very grateful to be here. I'm happy to not be having to do the cleanup. Looked like I was shirking my responsibilities if they only knew. So grateful to be here. I just want to tell you a few things, try to get through this very quickly. I believe that the Columbia Pike Partnership continues to play a very important role, filling a very important need in the community. We do see ourselves as having two primary constituents on the Pike, our 40,000 residents across 10 civic associations. Obviously, the most diverse part of Arlington, and as we talk about quite often, a quarter of all APS school children live within the corridor as well. While I don't have exact data on the number of businesses just in the corridor, specifically, we do know that there are about 21,000 business licenses in the 22204 zip code. Of those 2,100 businesses, 31 for-profit businesses are members of the Chamber of Commerce, which is less than 5% of the chamber, and obviously about a 1/1000th of all the businesses on the Pike are chamber members. So we feel like we have an important role to advocate and to speak with them and for them when we can. As you've probably heard me say in recent events, that we try to identify our programming through 5 main pillars: advocacy, branding and telling the Pike story, business support, community engagement, and placemaking. And we've continued to do that over the last several years. Obviously, FY26 has been a year of transition away from having most of our calls being about construction to just having a few calls a week about construction. That has been a very welcome respite, I think, for everybody in the county, but probably none more so than me or Sheila Borker. We do feel that we are proud of the work that we did in FY26. As Karen was saying, we have 40% of our budget does come from private funding. We are proud of that return on investment that we are able to return to the county. We also will finish FY26 in the black, which is a significant accomplishment for this organization, and I think all small nonprofits. But that did not stop us from being very busy in FY26. We will end up hosting over 100 events, not including the 300+ small business outreach meetings that we did in calendar 2025. And as many in this room know, we meet with the county a lot. Not just our primary partner with AED, but the county manager's office, CPHD, DES, APS. And we're grateful for those collaborations and those partnerships. We added events this year, Pike Fest in October, Culture Fest in April. We're revitalizing the farmers market with some financial support from the Arlington Presbyterian Church. Some of you may have attended or been exposed to some of the business forums that we've done throughout the years. So we obviously did a lot of very tactical and very intimate meetings with the business community, especially during the height of the construction. Thank you for surviving that with us. For FY27, we don't see it being a different, but an and, that we will continue to do our 5 pillars, but try to be more proactive and less reactive, less tactical, less constituently focused, and thinking about what is the strategy here. How do we think about advocacy in terms of form-based code and what needs to be evolved there? How do we continue to do targeted marketing and branding for the Pike in the ways that some of our bid brethren are able to do in terms of reaching out to targeted journalists, targeted audiences, targeted publications, et cetera? How do we get out of not just supporting small businesses, but also doing our part to support business development? Making sure that we are a partner in helping attract retail and developers to continue to come to the Pike. I think that is a gap that I'm very interested in helping fill, and I think there's a real opportunity throughout the county, but specifically on the Pike. We continue to do most of our events as makes sense, are focused on the community, wanting to make sure that we're listening to them, but also that they're reflective of the community. And then the placemaking, obviously, I'm very impressed with the National Landing placemaking strategy and plan. We would like to have one too. We've been in talks with Virginia Housing and others to see if we can accomplish some of that. We are in talks with AED about at least some public art, murals, et cetera. I think when we look at our needs, we're very grateful for the $410,000 that we received in ongoing funding the last 2 years. I think the year before that, we had $350 and then $60 one time, but nonetheless, I think we're now in our 3rd year of $410,000, and we're very grateful for that, and we hope to accomplish that again this year. Our needs are still continue to make sure that we are focused on what are the highest priorities, not just for the CPP board and our strategy, but also that they're in alignment with AED and the county's priorities. That has meant that we are really focusing on the economic development opportunities, thinking about, and to follow on what Kate Angie said earlier, Kieran said earlier, and we've heard from others, making sure that we have the data and tools to make sense of what we're doing and not only explain what we're doing, but to help drive what we're doing. And some of that we can do ourselves through surveying and asking people feedback. Some of that is more either technical data, revenue data, things like that. Some of it's analysis, parking analysis, which has been talked about in the past, updating the retail small business plan in the county, thinking about housing, especially thinking about housing when we think about all of the market rate affordable housing and what happens when we replace a market rate affordable housing and redevelop it under neighborhood or commercial form-based code. Do we gain CAFs, but we lose how many marks, and what is the impact? We're in talks with Virginia Housing about doing an analysis of that work, and with George Mason. I think we need to look at form-based code more holistically and thinking about what are the barriers that continue to have the form-based code be an activator. It's been a great tool, but it's been over 20 years old. And tomorrow, CPP will celebrate its 40th anniversary, but neither things are the same as they were when they were founded. I have pressure from my board because of the financial pressures that we're under to explore looking into a bid. It's not something I would recommend. I don't think our property owners would do it, but there are those pressures. And then the data that Kate referenced earlier, placer ID, how can we continue to find ways to use the data that exists? We use the development dashboard, we use the open data, we've done some of the ARC data that the county provides. The county's data people are very helpful across the county, but being able to amalgamate that and really put an economic development lens on that is where we still have gaps. So I think with that, I'll stop there. I'm sure there's a lot I left out, but if you'd like, I could also just give my remarks from lunch. No.
No. Thank you, Mr. Schneider. And Mr. Schneider alluded, today was the Columbia Pike Luncheon. All 5 of us were there. It was at 903 South Highland, the Ethiopian Community Development Center. I'm keenly aware that there are 2 former executive directors of Columbia Pike Partnership in the room.
Me too.
So any opinions I have are subject to the expertise that the 2 bring. I would say that for me, the fiscal work that you've done, I'm grateful for, and to sort of focus in on the timing of the expenditures and move to a budget that is within the June 30th to July 1st. And then, it is simultaneously important to be strategic, but it does count for me that you are every Sunday running the darn farmer's market yourself. My general view is get caught trying, and you certainly are doing that. And so the broader conversations, yes, we are in a new moment, and you've touched upon the diversity of the Pike. There is undoubtedly, on the west end of the Pike, someone who is probably Latina, who is under 15, who is not wealthy, who wants the American dream. And that happens on Columbia Pike Partnership far more than other parts of the county. That's not to say we don't have poverty and economic, opportunities needed in all parts of the county, but at least for me, that is salient, and I think often of the west end of the Pike and some of the buildings there. So you have a complex bit. I do not want to go any longer because there are indeed 2 people who have been executive directors on this. I will go to Mr. Spain, if that's all right with you, Mr. Carantonis. You're next after that.
Thank you, Mr. Chair, and thank you, Andrew, for your work. And thank you also to our, I see our Commissioner of Revenue, Kim Klinger here, who formerly was in that role, and I know Takas Carantonis as well was in that role many years ago. You and I have had a conversation, and I served as liaison there, I think, last year. Look, I want to get right down to something. $410,000, you talked all the great, for your proposed budget. There's some cost incurred within that budget that I want to hear a little bit more about where we as a county can work more collaboratively, perhaps to help you. And where I'm getting at is your signature event that you have every year, which is the Blues Festival, where I don't care what part of Arlington you're in, people come to it. And I live on the Pike, been down there about 18 years. Can you talk a little bit about what is the cost incurred with that, and what are we as a county, have we been charging you to pull that off?
I think it's a good question. I think, when you have an event like Clarendon Day or the Blues Festival or the Jazz Fest in Roslyn, there is a multiplier. You hope there's an economic development multiplier that extends beyond the day of that event. What I found when I started is that event had become quite large, and we were not able to fully articulate the economic development benefit. And we were spending about $60,000 a year to put that event on. Some things that we've done, which was first making sure that all of our vendors were Pike businesses, Pike focused businesses, so we did not have the same vendors at the Arlington County Fair were also at the Blues Festival. I think that was an important thing. We've tried to, while maintaining the quality of the music, make sure that the music is representative and reflective and inclusive of our community. This year and last year, we had a Pike resident, or a Pike talent, if you will, support there. I think the single biggest line item that you referred to, Mr. Spain, is our cost of public safety, and I think we all make choices about the sizes of our events. I mean, the largest event for the police department every year is the Marine Corps Marathon, county fair, things like that. We were shutting down Walter Reed. That cost, because of the cost of police, because of the public safety posture, has increased every year. By last year, it was about $18,000. The county has a credit that they provide to public events that can be up to $4,000. We are fortunate that the Pike has received the full $4,000 as long as I've been associated with the event. Some of our brethren, I think Earth Day and others, they don't even necessarily always receive the $4,000. The calculus might be a little bit nebulous. I think the challenge, however, is that the $4,000 has not been increased. I could be wrong on this. It's either since 2012 or 2008. We all know that costs have increased significantly, especially related to our police department, since either date. So this year, we will move the location of the Blues Festival to drastically reduce the cost of the public safety. I don't think it's necessarily a bad thing or a good thing. We have a $120,000 programming budget. How much should my budget in any given year be given to a one-day event, given all the other opportunities and needs that we face? And so I hope that puts some context around it.
It does, and I'll end with this, and I think we're going to need to have additional conversations because, again, maybe I'm showing some level of bias, but when you put on a program as such, and I can correlate that to, name a location in Arlington that are one-day events, from an economic development and economic stimuli point of space, do you feel it is something that the county, perhaps, right, should lean more into, not just aside that it's a Columbia Pike thing, because I think there's mutual benefit in doing this and there's some economic stimuli tied to it. So we can talk later. I just want to see how much of that burden and cost are associated through the partnership, and where can we perhaps help out along the way to make it easier, because I think I know where you're heading with this festival, and I'm here to tell you that it's going to be very tight. It's not. We'll see, but it's going to be tough. All right. And I know you're financially you're put in a situation, but we got to figure out ways, I think, to do it better.
I think for all of us, what we have to decide is where does this fall in the order of priorities, right?
Sure.
And so for me, and I don't mean this pejoratively, but we are not just the Blues Festival, right? We have to make sure that we're doing all of these other things. And part of that comes from the direction of our board. Part of it comes from our colleagues at AD. Part of it comes from the county board. And so those prioritizations, with lack of you must do this or wink, wink, you probably should do this, we're making the best decisions that we can. I think the economic, and then this goes back to the data point, it is difficult to gauge the economic development of that in a vacuum. I will say that our small businesses, especially before we started asking them to be active participants in this, did not consider it a very helpful event for them. When we went to Pike Fest, which many of you were at, which was at Penrose Square, only about 1,000 to 1,200 people there, but we had more active business participation. They were much more effusively positive about that. The businesses were much more positive about that event than the Blues Festival. So from an economic development standpoint.
Okay. Thank you, Mr. Schneider. Mr. Carantonis.
Thank you. I'm mindful of time, and I want to accelerate a little bit. I can have a long conversation with my colleagues about what kind of placemaking the Blues Fest is and what kind it isn't. It is, I mean, they come in different formats, and they have different, it's a community event. And it's something that binds together an entire community for now several decades. I have one question for you that's, kind of, that bothers me a lot, and I know that it bothers a lot of my neighbors on the Pike, especially on the Western Pike. We lost a grocery store. It's not the first time that we lose a grocery store. The first one was an affordable grocery store. The second one was a less affordable grocery store, but it was still a grocery store. This is an area that is, serving about, 15, 16,000 people. Most of them lower, and so I can only imagine how tough it is for CBP, for the Columbia Pike Partnership, to deal with this significant blows, on which you have no control, of course, and we have less so. But I would like to hear whether there is an angle from you that we should be on our side here, economic development, but also the other factors of county government. We should be more responsive, or we should be better partners in this.
Yeah, I think it's a really good question. I think it does speak to the point I was making a few minutes ago, saying that I feel where the partnership can fill a gap is with an additional emphasis on business development. That is a challenging site that Harris Teeter vacated the property, is still paying the lease. There's not an economic incentive for anybody but Harris Teeter to fill that space. So really what it requires is engagement with Harris Teeter corporate to get them to do it, and then to work with local retail brokers, and it's probably gonna have to be another grocer. And it's probably not gonna be an A-list Harris Teeter level grocer. It's gonna be a more niche or a grocer that might not have a national, so that takes legwork. And so with all of the competing pressures that AED has in terms of where their vacancy revenue challenges are, I think that's something that, it's one of my top priorities for the rest of FY26 and then first quarter FY27 is to engage. But those are North Carolina people that I have to go find, talk to. The building people, they care, but they're getting paid every month. And so that's about the best I can say. But yes, I'm still getting more construction questions, but Harris Teeter's creeping up.
Thank you.
Thank you.
I had a wager that we wouldn't mention construction today, but I just lost it.
Thank you. Thank you. Thank you, Mr. Karantonis. I do think that there's probably some strategic afterwork on that last topic that might be helpful for you and also Mr. Karantonis and all of us as we work forward. Thank you so much. The next group is the Langston Boulevard Alliance. And we are supposed to be all done with economic development. It is an important topic, so I can live with that, but I also share that reality.
I'm not Ginger.
Our alliances and bids are living economic development. Yeah.
Sure.
Thank you all so much for having me. I'm here on behalf of Ginger Brown. She's on someone's beach right now, so nice. I know.
Sure.
So you all have me. I'm Tanya Graham. I'm currently the vice president of the Langston Boulevard Alliance Board of Directors. And so again, I'm here on behalf of Ginger Brown and the rest of the board, and I'm honored to present what we've done so far this year and our ask. This past year, we have accomplished some significant milestones, and we are definitely eager to build upon those foundations as we look ahead in our implementation phase. Fiscal year 2026 was remarkably productive for us, and we anticipate 2027 to be just as dynamic. After more than a decade of dedicated community engagement and grassroots efforts, the Langston Boulevard Area Plan is now well underway. Our first project is 250 units of affordable housing that has been approved, and we are excited to see 5 additional projects progressing through the SPRC process. And LBA, we remain actively involved as these initiatives advance throughout the coming year. Leveraging the Creative Placemaking Grant, LBA, we were able to launch Look, an unexpected art experience. This was a pilot event that we were able to transform underutilized retail space into a vibrant venue for the arts. We were able to bring new visitors to the corridor, and in collaboration with several arts organizations, we welcomed more than 3,000 guests over 3 weekends. It was an amazing event. With our digital platforms and branding ready, we are poised to continue this innovative programming in 2027. We are also preparing for our 5th annual Earth Day Festival. This is a well-anticipated festival that we have every year. This event draws thousands of neighbors and visitors to celebrate Arlington's commitment to environmental stewardship. This day actually brings together music, arts, family-friendly activities, county agency booths, and local food and drink vendors. Our People and Places project, initiatives through an Arlington County Historic Preservation Grant that we were able to compete and win, continues to thrive. We have conducted interviews with dozens of legacy businesses, influential cultural figures along the corridor, and we are continuing to expand this initiative to highlight even more community leaders and businesses that are along the corridor. LBA has also hosted the Langston Boulevard President's Breakfast, along with our President's meeting with DES staff, fostering valuable dialogue on transportation planning and projects. Our engagement with intersection studies, the corridor study, Vision Zero initiatives, and the VDOT study will definitely remain priorities for 2027. As you can hear, we are very optimistic about the future of Langston Boulevard and look forward to the continued investment and revitalization of the corridor. However, to sustain this momentum and to ensure we continue delivering impactful programs and initiatives during this phase, we must also address the financial realities facing our organization. Despite our progress, our budget has remained flat for several years. We are respectfully requesting a $20,000 ongoing increase to our grant to support salary adjustments and official bookkeeping needs that we have. Our team operates with maximum efficiency, assuring every dollar is wisely spent, but rising costs have made it increasingly challenging to maintain the standard. Without an increase, this will be the 3rd consecutive year without a cost of living adjustment for our dedicated staff. And so to retain them, our talented team, we must offer modest but meaningful increase in staffing cost. In closing, I do want to make sure that I extend our sincere gratitude to the outstanding staff at AED, CPHD, and DES, and with special thanks to our liaison, Susan, who's here, and a strong collaboration between LBA and your teams is deeply valued. We look forward to continuing our vital partnerships in the year ahead. Thank you all again.
Thank you, Ms. Graham, for joining us and for calling out Susan Sirocco, who's our staff liaison, and I think Mr. Spain is our, if I'm not mistaken, I believe is our board liaison. Certainly appreciate your comments, and things are moving. Mindful of that. Colleagues, open the floor to questions. Mr. Spain.
No, Tanya, Madam Vice President, thank you very much for being here today. In absence of the Executive Director, it's been a pleasure working as the board liaison to LBA for the past year and a half. And also everything you're doing with the Look program that went on this year is amazing. And Earth Day that is coming up. The question that I've heard for a while, about remaining flat, the numbers don't lie. I think we all realize that, and we're in a very tough space right now for a number of reasons, but really appreciate you sending over the letter for us to look at that. And I would just say continue to do the great work, with the Langston area plan that's in place. And like I said earlier, there's a lot of potential along the corridor there, and look forward to continuing working together in as much peace and harmony that we can find between the county board and other stakeholders. So thank you, and we'll continue to have these conversations. Thank you, Mr. Chair.
Thank you, Mr. Spain and Ms. Graham, and I think Mr. Garantonis.
Ms. Graham, thank you so much for the work. People have seen Look, now see. Yeah. There is no bigger proof that partnerships work for the community, for the society at large, for the economy. I mean, you managed to have an event in the dead of winter that in an empty parking lot, and you had parking problems 3 times. 4,000 people Yeah, I believe that. It was absolutely packed, and everybody was very happy. So thank you very, very much for
So
this.
thank you all for your support.
Thank you, Mr. Carantonis. He captured it eloquently and perfectly, and thank you for the work. Heard great reviews as well. We will keep moving forward, but we're mindful of our responsibility to help with implementation of the plan as the projects go forward. Thank you, Ms. Graham.
Mr. Chair.
Oh, sorry, I didn't see.
That's okay.
Ms. Cunningham.
I was going to ask about the implementation of the plan. So I know for all of our partnerships, there's different kind of phases and stages, and you guys are in an exciting new stage of exciting / agonizing new stage of implementation of a brand new plan, which usually comes with some identification of tweaks and refinements that may be needed. This may be a follow-up question, but I'm curious if you thought about like what is being asked of you in the implementation of the plan and what additional resources or partnerships or funding you might need to, get through that the next couple of years.
Yeah, so the transportation piece is still a major piece along the, sorry. Close enough? Okay, the transportation piece is still a major piece as we're in this phase. So we have the Leaky Gardens unit ready to go, and then we have 5 more in the Pike. And so the transportation piece is always an ask, right, as we're working through, but also to our constant communication and our ability to be flexible as changes happen through the SPRC process, right, and our ability to continue to guide people back to the plan. And to, just to continue to guide and communicate right through this plan. So I think there's and we always talk about this, our ability to be flexible as questions come through, as changes in plans come through. That is one of our biggest things, and our ability to be able to go back and communicate those things back to the community. And so but again, transportation, that is our biggest thing. I think, it's moving now, right? The train is definitely moving. But we think the piece of transportation is not as moving as fast as the other pieces are actually moving. Great, thank you. Thank you.
Thank you. You may know this, there was 400,000 plus in NVTC money going to the 55 that should be approved within the next month or 2 months. And given that I heard plenty about the 3Y, I just thought I'd mention that. That does not mean that that's all of the transportation piece at all, but I did want to just name it out loud. Thank you, Ms. Graham, so much for your leadership. Sure. All right, now we will turn to Arlington Economic Development. Colleagues, we did have a break, but I'm going to ask that you take the break on the fly, if that's okay. And we'll go through a few slides here and then see if there's popular demand to overthrow this work. Then after 19 slides, we may take a break. I just, we're sufficiently behind that maybe we can take it on the fly, if that's okay with colleagues. And I believe it's over to Mr. Schwartz and then to Ms. Angie.
Yeah, thank you, Mr. Chair. Before we go over to the AD presentation, actually, I'm glad that Karen brought up my presentation in Advance Arlington, because we were talking a little bit about the economic landscape, and we were having a meeting with the school board just the other day. I think that was yesterday. I've lost all sense of time. Oh, it was Tuesday? Okay, whatever. We are in a time of really, serious uncertainty regarding our economy, especially with what's going on in our region with federal actions. And most notably, we've seen that reflect in our hotel stays and consumer spending and high office vacancy rates. And then not to mention the broader challenges we're facing with job losses and higher unemployment rates and what will probably be higher inflation and raising fuel and utility costs. We've spent a lot of time focusing on our economic resiliency as a government. And, the way out of this, and you're going to hear a lot about this today, is to strengthen our position. And that means job creation, growing business, getting more people to eat out and stay in our hotels, working with our commercial market resiliency initiative. But I did want to say, this board, 18 months ago, you passed the adaptive reuse policy. And since then, you've given the go-ahead for 5 new projects to convert 7 office buildings totaling 1.75 million square feet into 1,169 residential units and 344 hotel rooms. So we thank you for your partnership on that, because not only does that add much needed housing supply, generate more tax revenue, it makes me happy. And it's important that you make me happy. That really should be your goal. With that, I'm going to turn it over to Kate Angie for her presentation.
All right. Thank you, Mark. Let me get the slides up. So good afternoon. I'd like to thank the County Board, the AED leadership team who's here today, and members of our staff, our colleagues with the bids and partnerships. As you have heard, they are a huge partner to us, and the members of the public for being here today and your continued support of AED. To kick off the discussion today, though, I wanted to kick it off with a discussion of the economy, because that really is the pretext to what we do. Mark alluded to some of this, but big picture in 2025, if we go to the next slide, our region experienced some economic shocks. This was felt most acutely in job losses brought on by federal workforce reductions, a prolonged government shutdown, and associated impacts to tourism and consumer spending. As reported by Brookings, the DMV region lost 56,000 jobs in 2025. The DMV and Hampton Roads had the highest job losses in the country compared to other metro regions of 1 million or more people. Additionally, our country as a whole faces many multiple and overarching economic risk. These include slowing jobs momentum, uncertainty, and the increased cost of doing business due to tariffs, persistent inflation, and higher interest rates. These dynamics are further exacerbated by geopolitical and federal policy uncertainties, namely the ongoing conflict in the Middle East and the risk to energy prices, which we know will raise prices on everything. So we have a lot in front of us. If we go to the next slide. Here in Arlington, there's a couple of things that we've really been paying attention to in terms of our economic indicators. For jobs, we ended the year at 3.1% unemployment, which is up 55% from December of 2024. However, we remain below the national average of 4.4%. As it relates to our commercial office real estate sector, this is where we continue to see declines. Since 2020, this real estate class has lost $5.1 billion in assessed value. We all know that this impacts our tax base. And in tourism, this was another really hard-hit area. Hotel occupancy down 7% in 2026 over 2025. 2025 over 2024. Reagan National saw 5% fewer passengers, and we know that visitor spending is also projected at 7% down from the previous year. So if we drill into some of these a little bit further, if we go to the next slide, office vacancy, we know we've been talking about this for a very long time. This is the history since 2013. You can see the peaks and valleys. You all have seen this slide before. But we have seen some stabilization. What I love to see is that little dip where we are right now, which is some stabilization. That said, there's still a lack of investor confidence in the office market. And if we go to the next slide, we can speak to that a little bit more. So this is a bubble chart, if you will. We've got a member of our team that I can thank for this, Troy. But within the region, the way Arlington compares to its peer jurisdictions in terms of office vacancy and office rents, the x-axis is showing vacancy rates and the y-axis is the average base rent. So the size of the bubble represents the size of the market in rentable square feet. And for context, Arlington has 42 million square feet of rentable office space. Larger markets like the District and Fairfax and Montgomery counties may have lower vacancy rates, but they have a higher number of square footage vacant. So just some context. And when we think about the commercial real estate market in general, investors are looking for places to invest that are up in that left quadrant. We here in the DMV region don't have any of that. So this isn't just an Arlington problem, it's a regional problem, and this is going to be our problem for a while. So it's going to take some time to not only, even if we see some improvements on vacancy, the investor confidence in the office market is going to take time to rebound. If we go to the housing market, the next slide, and this is another indicator we're watching, which is the multifamily residential market. This is what's showing you here is the number of deliveries over time, as well as the overall vacancy of multifamily residential. And what's notable is between the last few years, we've declined in our deliveries. So what we are watching is to make sure we track this, because we know that overall deliveries are down due to higher construction costs and interest rates. There's significantly fewer units under construction, which means there'll be a drop in our supply. However, there's some bright spots here, as Mark alluded to. Some of the office that has been repositioned is being repositioned into multifamily residential. So we will see some new deliveries in 27 and 28. And the Ballston Macy site has also started their construction early this year. If we go to the next slide, all of these things are driving this graphic. We have gone and seen, a real hit to our fiscal bottom line. With declining office values, the tax revenues are down $113 million since 2020. Our hope is that we're close to the bottom, if you will, of this asset class, which means the drops hopefully don't go much further down. But as we keep saying, this drop in assessed value reinforces that it isn't just about the vacancy. We have this structural problem that is going to take time to solve. We go to the next slide. So what does this mean? We are in a very dynamic economic environment. For jobs, the losses appear to be stabilizing, and I will say I think the worst of predictions for potential federal workforce reductions have actually not materialized. The knowledge work sector, which is a huge part of what we do, those are the folks that work in offices, which is a big core of our talent base, is holding steady, but there are some risk and unknowns due to implementation of AI. We're seeing some potential job growth associated with the federal spending in national security, but also federal spending overall in modernization and tech innovations. So big picture, past is precedent, if you will, that major federal workforce disruption combined with technology innovations can lead us to a new era of economic growth. We are optimistic that that is in our future. When we think about commercial real estate, though, that is where we are still in this structural repositioning and a long recovery mode. While we've seen the vacancy rates stabilizing and even some of our neighboring jurisdictions saw some good declines in the past year, we're still sitting on an oversupply of obsolete office that will take time to address. For tourism, that's underperforming right now, but we also know from the past that when it begins to recover, it will happen quickly. And finally, business activity overall is up. We are seeing our pipeline of businesses interested in coming to Arlington increase. And we do know that with big investments like the National Innovation Corridor and federal spending on tech modernization across government, we are seeing demand drivers here that will signal new growth in our area. So in summary, we are showing economic resilience. We have to continue to adapt and lean into areas where we see the biggest economic growth potential. Next slide. So what does this mean for us? So much of the economic dynamics are outside of our control. But every day, the members of the AED team wake up focused on advancing economic development in the areas where we can control. Proof is in the results. As Mark said, 1.7 million square feet of office real estate repositioned, which we hope will be up to 2 million by the end of this year. We were responsible for either attracting or retaining over 2,000 jobs here in Arlington County, and we helped secure 500,000 square feet of office space due to businesses that we worked with. 33 companies were attracted or retained, 834 small businesses supported, 384 working artists paid through projects like The Look and other placemaking things and through our CAD resources. 465,000 in arts grants went out to local organizations. And even with a slim budget, 40,000 hotel room nights were booked through our sales team, generating $8 million in revenues. So as we look ahead, next slide, it's important to note that, we're going to continue to focus on foundational strategies that we know can deliver results. That includes business investment, thriving commercial areas, growing our tech jobs, supporting small businesses, investing in the arts, cultural, and tourism. And we know that this is all going to support job growth, real estate resiliency, and fiscal stewardship. The best way to think about our work is we're either driving demand The best way to think about our work is we're either driving demand, both large and small business startups, business growth, business attraction and retention, and tourism, And we're focusing on place, which is working with our partners in CPHD and the private sector and others to help reuse, reposition, and redevelop obsolete office and address other policy reforms that make our development practices better for businesses and investing in placemaking in our commercial areas. Next slide. I want to quickly run through some of our success stories over the past year. And you're going to see the headlines that say, focus on place, focus on demand. For CMRI, this is definitely one of our signature efforts, and I won't go over the stats again, but we continue to stay focused on this work and more to come in the year ahead. We're also investing more in placemaking, and our bids and partnerships are our key partners for this, and we recognize that this is a key component of place in our commercial areas, so we have to keep investing there. If we go to the next slide, when we think about job growth and business attraction, the Arlington Innovation Fund and the launch of the National Innovation Corridor are two of our biggest success stories. You can see the impacts up on the screen, but the bottom line is we are now in a position with the National Innovation Corridor to maybe get another $4 million from the state to continue these initiatives. So the work we do positions not just our department for continued growth and the impacts we can have, but we can attract other money and other funding to make a bigger impact as well. If we go to the next slide. In the small business space, we provide technical assistance, we operate the Open Rewards Buy Local program, and we do things like the Transformational Challenge and Pitch Fest. These have direct impacts. We know that the businesses that come to us for technical assistance and go through our SOAR program, which was formerly known as Relaunch, they get about $3,000 in consulting services to help do a marketing plan or retool their website. We also know when we do open rewards that it drives foot traffic. You can see the numbers here. For $18,000 in the money we put into the open rewards program, that drove almost $500,000 in consumer spending locally. So again, proven program for an investment we make. If we go to the next slide. As we think about our Cultural Affairs Division, this is another really bright spot in terms of what's happening. We've got the studio at Arlington Arts, which is the relocation of the LAC studios into the facility at 4 Mile Run. And this is really becoming a new hub for artistic activity and artistic entrepreneurship. We will launch in the spring the Spark, which will be a new outdoor market on the first Sunday of the month in the space right between AFAC and our building, and other things are planned throughout the year. And the one thing I also want to note is projects like The Look, as well as the Arlington Philharmonic, both came through the Creative Placemaking Grant Program out of our department and out of our Cultural Affairs Division. So lots to celebrate there. So if we go to the next slide. When we think about demand on tourism, this is another space where we are proud, even with our slim budget, that we continue to push for sales and visitors, trying to attract visitors to our community. We think that there's opportunity with the upcoming 250th birthday that we can partner with others to really get our brand out there. But we do have a constrained budget. We are looking, though, to partner with industry to look for a longer-term strategy that would give us a more sustainable and less maybe volatile way of funding tourism promotion. So we had some success here in the fact that there is a proposal on the governor's desk for approval that would enable us to do a tourism improvement district, and should we wish, with partners in the community, to increase our transit occupancy tax surcharge, which is what wholly funds ACBS, and also explore potentially private destination marketing organization over time. So if we go to the next slide. Against all that, equity is a key part of what we do, and it is incorporated in a lot of our work. What you see on the screen are some of the key events where equity is really a focus. We also have an active racial equity action team, and this has been something that we're not only incorporating equity into our work, but also into our culture. A couple of other things. In our small business team, we estimate that at least 50% or more of our clients are coming from underrepresented populations, and in fact, we have 2 staff members dedicated to the Biz Launch Espanol program, which provides all of our small business programming and services entirely in Spanish. Within the tech space, the 9 Tech Startup Catalyst Award winners, 89% of those were individuals from underrepresented populations in tech. If we go to the next slide. We're also not silent on climate. Due to efforts coming out of the Climate Office, we have partnered to support the Corporate Climate Leaders Program, and we see this as another positive asset that we can both share in terms of an attraction story and strengthen our work with small businesses to become more green. We also want to continue to explore opportunities to see, can we foster and grow green tech and other green nonprofit areas of our community from a business development perspective. Next slide.
Ms. Angie,
Yes.
I'm going to take a risk.
Yes.
We're going to split this into two just because the next parts seem to focus on the budget, if it's okay
Sure.
with you.
Yeah.
So I'm going to ask that colleagues, if you have one question on structural economic pieces, and one epithet that is true about me is I'm the son of an economist who says consistently that he can explain what happens after it happens, but not before it happens. So my question very specifically is, at one point, I believe the number was 76 buildings that we had that were just functionally obsolete, is the, nice buildings, et cetera, but weren't going to contribute to our economy. Do we have any sense, because the percentages, that one graph you had, boom, 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 we're going down, we're all different levels of worry about how much longer we have to deal with this piece of things. And I'd love to not just have my ideas about how much longer office will plummet, but to actually be somewhat data informed in my guesses. And I don't know if you have a number on those buildings or if you have any sense on how we're doing on office. Are we 2 years away? Are we 1 year away? Are we 3 years away? Of course, you can't say with definity, but if you could help us think about it so that we're not just guessing and acting upon the lessons of a dad who's an economist or whatever.
Well, I'm going to phone a friend. I'm going to have Troy or Mark, both of you, come and join me. But there's a couple of things that are going on, and I am not an economist either, so that's why I'm going to bring them to the table. I think big picture, though, the 77 buildings, with the adaptive reuse policy, we've taken on 7.
Yeah.
A few more are in the pipeline. So we are chipping away. The other thing I want to note, though, is we talk a lot about the 23% vacancy, but that means 70-something% is full. And no, we don't know if we're at the bottom, but we're feeling more that we're close to the bottom. But with that, I'll let others chime in.
Thank you. Maybe Mr. McCullough first.
Yes, thank you very much for the question, and thank you for the time here. And I'm also an economist, and I do believe I can predict the future. I'm always disappointed in myself when I can't get it right. But the issue that you asked is a good one and very relevant to our work plan for FY26 and 27, and that we are going to do a study that we're calling the Future of the Office Market. That's going to look at our efforts done to date with conversions and adaptive reuse. I'll also point out, we always quote the adaptive reuse. You know full well as a board, you've also approved redevelopments of old office buildings into new buildings. So we'll capture that transformation. And a lot of that isn't yet showing up in the CoStar data because that supply number isn't quite catching up with the reality. But I'll let Troy answer any questions in detail about that. But we'll be looking at those 76 buildings and sort of reclassifying them.
Thank you, Mr. McCauley. Mr. Troy, can you share your last name?
Yes,
I'm
my
sorry.
name is Troy Palma. I'm the regional economist at AED.
Thank you.
And with the 1.75 million that we have repositioned, that takes it out of the denominator. So that helps out a lot. And so if we want to get to, what are we going to call the bottom? Are we going to call it 10%? We're going to call it 15%? At some point, we have to say, this is where we're going to be, where we're at a stabilized level. So if we're taking 1.75 million in 2 years, can we do another 2 million? That would get us to 15% vacancy. Mm-hmm. Okay, so this is how we've got to think about it now. With a combination of taking obsolete square footage out of the supply and also filling in some of that empty space that is still usable, but because of market demand, no one is occupying it currently, we can get to that coveted number, whatever it is we call it. So that is how we're going to have to look at it. My crystal ball is as good as my fellow economist here, but we have to look at it that way and be persistent in how we go about it, but tackling it both from taking the obsolete space out and also working from the demand side to get that empty space filled.
Thank you very much. I'll let colleagues, we do have one economist here, but we'll start with Vice Chair Coffey.
Yeah, thank you. And part of this is more around how do we communicate and message around the changes, right? Because I think as there,
Don't make the manager do this on his
you were
own.
overconfident. No,
Sorry.
as we think about office vacancy, repositioning the buildings that we do have, and all the conversations around the tax base and commercial versus residential, and I feel like there is still this kind of narrative around what needs to happen as we need to get back to how we were. And I think to me it seems very clear that inherent in taking things out of the denominator of our office vacancy is that they are never going to return to the denominator. And so I think, how do we talk about this more as a structural shift in economic development? Like, our goal is never going to be to have 42 million square feet of office. I don't know what the right number is, and maybe you all have some metrics that you're thinking about where a healthy size of our office market could land. But sometimes I worry, especially as people talk about the conversions and everything, that they are thinking that that is going to fix our office market, when really what it's doing is kind of acknowledging office market isn't what we need or want anymore. And so it's kind of an economic question, but it's also kind of just how do we have that conversation with our community in a way that they can hear and understand.
I'll start and then I'll let the economists chime in. I think there's a couple of things. I think Arlington as a whole is a job center in the region. We don't want to ever lose that, right? So we will have jobs of tomorrow and we will have office of tomorrow. We just don't exactly know how much, and we don't know what that's going to look like. And I think that's why we keep saying obsolete office is the problem, because there are other cities that are doing better, and some of that has to do with the quality of the product and the combination of quality product with really strong demand. Things are looking better. It's going to take us a minute to get there. So I think that's part of the story that we need to tell. But it's going through this restructuring to allow, yes, some of it to come offline until we're ready to start building new office. And what does that even look like? And we don't know what that is yet, because the demands in what was traditionally an office sector are also a little bit in flux. So more unknown, but I think the story is we are still trying to define what the future of work looks like, right, and what that optimum balance is going to be. But I want to make sure that we are also still committed to Arlington as a jobs hub for the region, because we've got the infrastructure, we've built ourselves around that premise, and we don't want to let go of that either. So, Mark or Troy.
One more.
I think what we have to do is not just look at, we have to move from office vacancy, right, as the key indicator. And we have to look back at value now. We have to look at how much value have we lost in office. And we've always used to pride ourselves when we were, our tax base was 50% residential and 50% commercial, and commercial includes the residential portion of commercial. And if we were to get back to that level, we would of 50% each, we would need to find about $13 billion on the commercial side, okay? So how do we do that? It's a combination of, adaptive reuse, getting back the lost value in that office back into residential. It's finding new ways in which the future office worker will work, or all workers, because COVID really fundamentally changed how, when, and where we work. So do we have the foresight to plan for these new developments to accommodate the worker for tomorrow? Do we have that flexibility? Are we bold enough to do that? Are we bold enough to regain that $13 billion that we have lost? And that's the way I think we have to look at it, not from a vacancy number, not an optimal office number, but how do we get back to that 50-50 equal value in terms of tax base?
And if we were just relying on office, that's 13 billion is about 12 Amazons. Just to give you that.
Thank you both for that context and for the question, Vice Chair Coffey. Mr. Spain.
Thank you, Mr. Chair, and I'll try to be tight here on my questioning because I am the liaison to Arlington Economic Development in my second year, and I just want to thank you all, Kate and the team, for what you're doing. Kate, we've had some conversations in the past, and I will have a question here, but there's a lot to digest when we think about, we are strongly tied to the federal government in this region, first and foremost, and have been for a long time. Kate, you mentioned, I made some notes here, we are, very dynamic economic environment. A lot is due to, AI and digital technology and tech. I too watch you and the county manager in Advanced Arlington, and I heard you talking about risk, taking some risk, perhaps, right? Unsure what those risks may look like, but I think, we need to really, in my opinion, again, appreciate what you stated, that where we were at with 50-50, I don't think we're ever going to get there again, but reimagine Arlington and who we are and how do we attract and retain businesses outside of the national security federal hub, which is a big attraction, but we have to set our own destiny. And that requires a new level of vision from an economic space. There are counties across America that are in the same moment because of the societals are looking at new ways to attract businesses. So I want to hear a little bit about what type of companies are we actively going after to come into Arlington to fill some of these spaces. You and I've talked, but I think the public also needs to know a little bit more about that because we're always going to be highly exposed because our locale and where we are to the government. I mean, I'm looking at your graph. I mean, going all the way back to 2013, this ain't the first time, right? You had BRAC, you had the COVID. So I wish I was back in that time to figure out what the conversations were, because I think there probably was some similarities to this, even outside of commercial vacancy. But what was the thought to move beyond that? So I want to hear a little bit about what is the art of the possible? What are we looking at in the next 5 to 10 years? And what does success look like from an economic development prism?
Sure. Well, let me start by saying that our location will forever tie us to the federal government.
Yeah.
So we know that that's always going to be a sector, and it's also always going to be a locational dynamic for why even non-federal folks choose to locate here. So I think we want to celebrate that and not turn our backs on that. That said, I think one of the things that happened when Amazon arrived was we did get put on the map as something more than just a federal city or federal community or just federal presence, right? We have been able to grow a talent base around technology and kind of fast company growth that wasn't here before. And that's what we want to keep leaning into. So our investments around the Innovation District, let's use this as an example. While yes, that is going to build on what the feds are doing right now, but the talent it attracts and the businesses in non-defense that are starting to want to be here because of the technology the investments we're making in tech in general, that's our future. We need to keep leaning into that. What we have seen in terms of the attraction pipeline, though, across the country is not great. There's not as much movement into this area as there once was. We are having to compete to places, to the south and less expensive markets and things of that nature. But Our attraction strategy is also going through a retooling. And I'll say that because we've launched now the National Innovation Quarter, but what we're also doing is we have something called the Tech Launchpad. And that's where we're actually trying to attract smaller and medium-sized foreign companies to come to our area, which, by the way, they love because we are an international place. And we've got a very welcoming international community. So we have a lot to do there in terms of figuring out how do we build on what our kind of innate strengths are, which is the fact that we do have the Pentagon here, we do have a strong defense tech industry that's growing, but how do we spark kind of the next generation of new business activity that can be related to but distinct from that? So we are working, Brandon, who's part of our business investment group, and Michael, who I know is on vacation but listening in today. We've got some brainstorming sessions set up on the attraction side because we want to take a deeper dive there. The other thing I'm going to say, though, is we work very closely with VEDP, which is the state economic development arm. And they, too, are trying to help the state writ large at attraction and really growing beyond kind of the federal sector. So we're going to lean into that partnership. They've got some new ideas about how to better position the state for both talent and businesses. So more to come, I guess, is the simplest way to say it.
You know, before I came to the board, a lot of folks know I was in corporate, and I think it's a multifaceted decision-making for companies when they want to come here, right? And you talked earlier about CPHD. I would argue, and I think, I don't want to put you on the spot because we're talking specifically about AED, but in location and placement of companies, there's a reason companies leave here and go out west or Midwest. A lot of it's tied to cost of living. Some of it's tied to housing. So you can bring the brain trust and the smart folks here, but if they can't afford to live here and it's not in the business model for even for a company, that's also part of it, right? So, I mean, I think it's not just let's get this building fixed and put housing in it if it's not affordable, and companies know that, right? Guess what? Their early career professionals can't live here. They're not going to invest here, so they can build out their company. They're going to go to Des Moines, Iowa, and other places. I know this. So thank you very much. We need more housing. Thanks.
Let me say one last thing. First and foremost, I think Marcus said this, and we will all say it, the number one selling point we have besides location is talent. Having talent here, keeping talent here is critical. So the other thing, and my predecessor used to say this, economic development is everyone's business. So it is not just AED, it is the whole of what we can bring together to address those issues. And we're here 100% supporting those dynamics as well.
Thank you, Ms. Angie and Mr. Spain. Mr. Carantonis.
Thank you, Mr. Chair. First of all, I have to, in very difficult times, I have to commend the department for keeping a very straight philosophy of how to attack certain problems. And they don't show in everything that you are reporting. One would sometimes take away the impression that you are the Department of Managing Office Vacancy. This is not true. You use office vacancy to just indicate, or, you know, it's kind of a container for a lot of other things. And I think that last year has been very instructive for all of us to begin to understand the complexity of a local economy that is embedded in a regional economy that's embedded in the national economy. So I thank you for the first slides there. I have to say, for me, that's the economists, the demons inside. So for me, there are certain things that are stronger indicators, like, for example, net investment, right? Capital flows, job creation, even down to things like job postings. So I will give you an example that is a good news for once. The entire region in venture capital, the things that go to risky new things, is down compared to the United States by 33%. The entire region. There is one outlier, That's Arlington County. That's up 6.25%. We outperform our peers by a factor of minimal 3 in being able to attract the newest best. So if we talk about talent retention, et cetera, there are measures that can show us how this is going. I was just reading, if you're the Washington Business Journal, you'll see that there are, even in the region, companies, not only startups, not only defense companies, who are considering Arlington as a good landing pad. I was myself a skeptic of how important a innovation quarter is. I'm far less today because of the evidence. At the same time, the challenges are job postings, for example, in the last year, 2025, in Arlington is down 20%. So we are not, we are talking about higher unemployment rate, significantly higher employment. It's still near to full employment, though, 3.1. But job postings are so these new and better businesses, they don't really hire. And we see it out there. This compounds. So one of the things that I was trying to figure out is, how do we calibrate for sectors that help us with these things? One thing is external, being attractive to international and external investment, both national-wise, that I understand, but also to international investment. We're a different type of America here. I do know that the United States is attracting far less investment from outside than it used to, or it is investment that comes from very specific countries like the UAE. So one of the things is, how do we position ourselves there? Northern Virginia, $1 out of $4 invested in Northern Virginia comes from outside the country. So having a projection outside is important to me. The second sector that I've seen booming, actually, and it's very talent retention related, is the academic sector. So we have, we've seen last year Fuge coming online. We have seen Virginia Tech, that's not in Arlington, but it's practically, with one foot in Arlington. These are anti-cyclical, and they employ a lot of people, and they signal talent attraction like nothing else. So for me, these are the two sectors that I would like to see more of a focus on, because I think that these are strong sectors to build on.
Okay. So, thank you. You want to comment on those two sectors? Okay. All right. Thank you very much for sharing your thoughts, Mr. Karantonis. We'll now turn to 13 or 14 slides that's budget focused. We'll ask you to keep going. My apologies, I did not see you.
It's okay.
Go ahead, Ms.
The lighting
Cunningham.
is tough on here. It's harder to see. On the same topic of workforce, can you share a little bit about how AED is working with our employers, with our universities, APS, DHS? Like, how are we juicing the workforce to meet the current needs and the very rapidly evolving needs? And what more do you need to be able to really nail that?
So first and foremost, we do not have a dedicated workforce development team. That is something we work with the Workforce Development Board and others on. But nonetheless, we have and continue to have conversations with the large employers about that gap. And what we try to do is get a good handle on the relationship with the universities and better connecting. We are connectors in that regard. That said, this is a topic area that I want us to lean into a little bit more moving forward. And the reason I say that is for all the reasons we know, which is that we've got some weakness on the horizon in terms of, while we may see job growth because we're bringing new folks in, we still are having kind of this persistent lag in terms of filling the gaps in the system, if you will, and not having enough. The state is moving in a direction to better position their resources to help, for instance, strengthen direct internship programs that can be set up and work with the big employers in our region. So more to come there, that it's on a horizon. I will say, though, our team, we don't have a dedicated workforce group because we just don't have the resources. But it's on our minds, and I think we can lean into our partnership with George Mason, our partnership with Virginia Tech, partnerships with Northeastern and many of the others, because we do have a booming university system here. So I think there's more opportunity there.
Yeah, that's great. And I think I'd be interested in what it might look like to resource that properly for this year, or to study this year and then resource properly going forward, because I think across the region that remains a gap, not just in developing workforce in generally, but also linking, from very entry point up the ladder, which we have sort of that K-curve problem of really low income, low wage jobs and then really high wage jobs, and we need to be able to ladder people across. Secondly is on the question of kind of leaning in on risk. It seems like demographically we have huge needs for senior services, for medical care, for senior housing. What are you seeing in the market about positioning that? I think we talked during the housing work session that nearly 2/3 of our senior housing is the committed affordable, which we don't usually have too much of, so that probably indicates a huge gap. Are you seeing opportunities there? And that can be offline too.
We have not been approached, to my knowledge, with any kind of active developers in that space or that sort of thing. But where are my real estate folks in the room?
We can also take it offline if you want to just do a little thinking on it.
We can look into it more to understand kind of the future of that real estate development market, because it's huge.
Okay.
And how much of that can we capture, and what are our assets or position to be able to capture that market? I don't have a good answer, but we can get back to you on it.
Yeah, and it just seems like it's such a great place to be retired, and we need to meet that need. So more on that offline. Similarly, on the risk, data centers, I know, is a huge issue across the country. And we're not really a good place for many of them, but are any of the micro data center concepts coming up with our employers or tech companies? You see any light there for?
No. This is something that, though, gets brought up all the time, because we all wish we could generate the tax base that comes along with that. But to date, no, that's not really an area where we see opportunity.
Great. And then lastly, I think we had a robust conversation last year about some of the small business and innovation investments that we have made. And I'm curious, especially with the tension of needing to do more workforce and the overall budget of needing to be crisper, if we were to do less on, the AIF or BizLaunch work, what would be the outcome? Does it scale? Could we do 80%, or is it impossible? And that can also be an offline question.
I think I'd like to take that one offline, because I think you're asking if we actually reduced either of those further. Yeah.
Right. So we can talk more about it offline, but those are my questions.
Thank you. I think if the ears of God are listening, there's 3 questions there. One has to do with workforce, one has to do with senior housing, and a third has to do with the last one. So thank you very much. I sort of took the risk of dividing it there, and then I think there's 14 more slides, and we'll see if we can focus on the budget pieces. Over to you.
Great. If we could pull the slides back up. So as we've kind of set all this up, as we look to, FY27, Arlington's going to continue to see some economic challenges that we've described, but we also see a lot of optimism and growth potential. And I think what we tried to do with this budget was to identify how do we best position our department to lean into that, potential. Given the constrained budgetary dynamics facing the county, not only today, but likely in the years ahead, we've proposed some strategic moves within our department to reduce costs and increase fees. This includes a reorganization and reallocation of funding to ensure we are able to meet the economic moment and deliver results based on what we know works. So that's really around these 5 bullets. We have to continue to focus on driving demand. We've been describing that in terms of tech ecosystem and small business starts. We want to continue to focus on place, which is doing all of the work to transition our real estate that's not working and get it into more productive, working sort of tax-generating real estate. We also want to continue to do placemaking. But the third bullet is we have to partner and leverage ourselves with other resources. So that's going to be something new that we try to do. And so without having funding, what I'm trying to figure out is where are there grants, where are there partnering opportunities that we can use to really be a force multiplier for bigger impact. And then the fourth bullet is we are proposing to really reorganize our whole communications and marketing approach. And we're going to be leaning on our friends with the bids and partnerships on that front as well. And then finally, we're increasing fees to continue to move us towards cost recovery. If we go to the next slide. 2 big buckets for us in terms of economic resiliency, driving demand, and focusing on place. And I won't linger here because I think we've said this enough, but I will say that we really do see ourselves as a force multiplier. When we do good work, others come and either they replicate us or they say, we want to give you more money to do more of that and make bigger impacts. So we want to keep doing great things to make that happen. So if we go to the next slide, for the budget, what we are proposing to do is that we've got to, again, see ourselves as this force multiplier. And so we have to strengthen what we do that we know has tangible outcomes and strengthen our partnerships. So we're proposing a reduction of costs by 2.7% and an increase of fees by 20%. Of note, there is also no one-time funding proposed for FY27. You may know we received $750,000 in 2026 and over $800,000 in 2025 in one-time funding. So while the 2.7% may not sound big, this is on top of those losses in one-time funding as well, which has led us to taking some big moves within the department. We didn't simply look to reduce costs, but we looked to ways to reorganize the department to be more responsive to the economic challenges we face. This includes a significant program cut, which is the elimination of the communications and marketing team and some additional reorganization within the department. This impacts 4 existing team members. To those impacted, I want to acknowledge the weight of the proposed decision. Each member of this team has made significant contributions to the department and has also handled this moment with the utmost professionalism. For that, I am grateful. In addition to this change, we also, if we go to the next slide, are proposing to freeze the public arts manager position. This is just a freezing for this year that we hope can just kind of put a pause on things as we retool a little bit our placemaking priorities and look at public art and figure out how do we best align all of those resources together. Our hope is that this is a temporary move for this year and we can reinstate that position down the road. If we go to the next slide. So in addition to the cuts, we've been able to increase fees. And this is in line with the county's overall shift towards fee recovery. So all of this is within our Cultural Affairs division. And you may recall you approved the increase to the CAD staffing fees last year, but you also said, let's just do 50%. And so this is the year that we would bring that up to 100%. We are also proposing to increase the scenic studio fees. This is only about a small increase, if you will, but this will allow us to bring in some cost recovery that we haven't had really before. And also we've retooled kind of the way we staff that and make those spaces available so we can be a little more efficient there. And then the last one is a new day rate fee. So we've talked about all the great things that are happening down at 3700, and we believe that we've got some new services we can offer. And in doing so, we can be at 100% cost recovery by charging for those services. So those are the key fee changes that we are proposing. The next 2 slides are just details on that we don't have to, we can go back to if you want to dig in further. But I guess in summary, if we get to one more slide. in summary, the fee recovery program, adjustments that we're proposing to make really put us at 91% of the Cultural Affairs Division is net tax supported, and we're able to recoup about 9% through fee recovery. We go to the next slide. This is just more detail. Again, same information in tabular format. Next slide. The last part of our budget I want to talk about is the Tourism Promotion Fund. As you know, the Arlington Convention and Visitor Service budget is directly tied to transit occupancy tax revenues. So what you're seeing on the screen is we all adopted the $1.45 million budget in 2026. We've had to scale that down mid-year because of the TOT revenue declines. So going into next year, you see all these declines are telling us is that this is what we're projecting in terms of TOT is not yet recovered, and this is the adjustment we have to make. Should that go up, obviously our budget might be able to be increased over time. You all know, though, we are continuing to do the work, even though our budget is limited, and we continue to work with industry partners to see if we can come up with additional funding tools for 2027. So with that, I will conclude real quickly. AED is committed to continuing to be nimble, innovative, and strategic in fostering economic growth and resiliency for the county. We have an amazing and dedicated team that fully understands our charge in helping to ensure a strong commercial real estate and business-related tax base and providing economic opportunities for all so that we can maintain a high quality of life here in Arlington. With that, I'll open it for questions.
Thank you, Ms. Angie, for the presentation. This is me taking a risk and hoping I can take us home. And ask a question if you need. For me, the biggest area where I want to understand better is best discussed because there are personnel involved on the communication side and those 5 positions. I want to make sure that there's someone who can manage all of the functions that we do consultant-wise. And so without objection, and maybe if colleagues are also with me on that question, I'd be grateful if we tried to schedule before the end of the budget process, either a slide deck or probably a short conversation on this topic, not because I want to be accountable and transparent to those employees who we value. I also want to think this through in a way that is respectful to them, those who've contributed. So that's one topic that I would name and put out there, and then I'll open it to Vice Chair Coffey, Mr. Spain, Ms. Cunningham, and I did not succeed at all in forestalling questions, but I will, of course, listen. Go ahead, Ms. Coffey.
Yeah, I think one of my primary questions was around the shift of the communications into contract. I think I'm trying to understand. It looks like, the cut is a 368,000 reduction, but the proposal for contract services is greater than the number of just keeping the staff. And so I'm trying to understand what's driving that, if possible.
Sure.
It makes me a little anxious to contract out things that we have the capability of doing in-house.
Yeah, part of it is the shift from communications to marketing and PR. So we have a very strong communications team, and we do some marketing. What I believe our mission is, and what we need to kind of spend more on, is on the marketing and PR overall. And in looking at kind of best practices nationwide and even seeing what our bids and partnerships are starting to do, that's where we need to ramp up our resources. So it isn't a one-for-one, even though it may look like that from a budgetary standpoint.
Okay, I think that's helpful to understand. And did we explore whether the communications rebuild could happen kind of in-house, making that transition from more communications to marketing, but still keeping it, within AED staff?
If we had more resources. And in fact, that is I think that the need for additional marketing support to the tune of $500,000 a year is what we are looking for. And so that's what shifted that. I will say that I think that, again, this is a very hard decision, and it impacts a lot of people, and it impacts our department in a very big way.
Yeah.
I think what What we are attempting to do, though, is look 5 steps ahead and say, we know we're going to need to be nimble and more able to adapt and kind of fuel things that are non-personnel funded for the next several years. And this gives us that flexibility over the longer term.
Okay, thank you.
I will interpret that as a second on the 30-minute, if I can. Mr. Spain.
A second on the 30-minute what?
A meeting with staff about this topic.
Sure. I think I may need more than 30 minutes, and I'll tell you why. I appreciate what the vice chair just stated. I am not clear at all on I'm from when we first started, and I heard from the bids and then the partnerships and what they're trying to do in and around the same area. I understand it's not a one-for-one per se, but these people, these filled positions, and I just also have an issue with subcontracting or contracting out this type of work, especially in this moment, without it really being clear. I think you were given a mandate to do something, cut across the board, and you had to figure out what to do. I think there's going to be some conversations we need to have because I, for whatever reason, I'm just not buying what's being sold here. And I think we need to look at alternatives because I think there's a high demand signal for this type of work across all of Arlington to include working alongside our bids and partnerships. And I'll leave it at that. Thank you, Mr. Chair.
Thank you, Mr. Spain. I will add, at least in the humanity of the process, there's the merits of this decision which you've shared. I believe it is our policy always to see if those whose positions do not continue have other opportunities in the county to work, and that is not sufficient for those 5 individuals. I just thought I'd name that truth, which I believe to be the case, and I'm seeing nods from other folks. So, Ms. Cunningham.
Just to tag, I think more for the public than for you, but we are engaged in working on the MOUs with the partnerships to really make sure they're modernized, make sure they're really clear, and make sure that what we're asking of each other is crisp and properly supported. So just want to flag that, more to come in the coming months, I believe. My questions are on arts and on the strategic investment group. So let's start with strategic investment group. The work that the strategic investment group does and our real estate team has been doing with CRMI, with reimagining things, with trying to catch employers and attract them to town seems absolutely fundamentally important to our economic resilience. And so I'm curious, how is that work going? Do we have the right-sized team, or do we need more there? And how do we make sure that, whether it's attracting a business, inspiring a generational site development, or consolidating lots so that some of our sector plans and plans can be realized. How do we do that? I know it sort of sits between AED and CPHD, but how's your thinking evolving on that? And if you could have more resources, what would that do?
Yeah. Is Mark still here?
He was hopeful that he could get away.
Come to the table. I'll pick on him in a minute. So we do, I think, have some resources in place that are putting us in a good position. But yes, of course, we could use more. We've got a vacant commercial development position that we have slowed down just because of this current crunch in this year, but we are ready to kind of ramp that back up. And that position, would be really valuable in helping us with not only continuing on the policy front, but also on some of these creative ideas around how do we do public-private partnering for development projects. So more on that. The freezing of the public art position is also within the strategic investment group. So if we can get that unfrozen, that relieves some stress there as well. But Mark, is there anything else you'd like to say about SIG?
No, I mean, I think, I'm not going to mention the resources issue because we all feel that, right? And I think the CMRI obviously has a huge demand profile in terms of you ask people, they all have an idea of what next, right? And we're managing that. I think we have a good work plan. I think with the resources we have, and I think some organizational tweaks on how we process the work internally, I think we can be efficient and deliver a lot of good results. I think it will be I can't promise anything as groundbreaking as adaptive reuse policy, but I think certainly looking at a lot of the use tables, certainly looking at the sign ordinance still, but a lot of work was done on that. But a lot of the urban placemaking stuff, which we've talked about, which we can talk about and we're rolling out this year, I think is really in line with CMRI about attracting people to a place, first and foremost.
Great. And then on the issue of lot consolidation for some of the visionary plans that aren't really possible right now because they're owned by various, do you guys get involved in that, or is it just we hope and pray that the stars align?
Yeah, I mean, I think as a local government, generally, it's very difficult to get involved in those sort of private transactions and make a difference that is respectful of the tax dollar. Obviously, private dollars will accept public dollars, but the question is what incentive are we really providing? So I think it's sometimes hard because often the holdovers are not for doing it for financial reasons. They're doing it because they don't want to sell. They just don't, those sort of things. So we haven't been involved, but certainly at a higher level planning and sort of a site plan level, we work with our development partners to help navigate that process. And there's a lot of planning and ISD work that has to be done as well. When you consolidate parcels as well. So.
Gotcha. Thank you.
Thank you, Ms. Cunningham.
And then my second area is on arts. So a couple quick questions. The arts and studio fees are described as cost recovery. Is that just personnel cost, or is it also facilities?
Just personnel cost.
Okay. And then we have spent a lot of time, and I bet we will tonight as well, talking about the wood shop for DPR, which you may not be really focused on. But I guess just a tag, and we'll come back to this, but we have like libraries has a makerspace, APS has some industrial design kinds of spaces. The wood shop at TJ is aged and needing some refresh. And then you've got the beloved scene shop that always has a just barely 2-digit cost recovery. So I'll just tag for all of us to think about, can we consolidate those in some magical way or get better bang for our buck or serve more people across? And then the last one is on the placemaking grant for arts. I think we heard from Mr. Carantonis and many others, the other 4,000 people in the community, that was really, really awesome. And I don't think it's proposed or funded in this coming year. How have you evaluated those pilots, and how do we decide if and when to move forward?
So for each of the pilot grants, there were 2 received. By the end of this fiscal year, we've actually just started drafting the set of questions so that we can get details on impact, that we'll find out exactly, first of all, was $50,000 each enough? What was the economic impact? What worked, what didn't? Is this replicable? So we'll come back to you with a report within the hopes of saying, yeah, we want to continue this kind of placemaking grant program, which is brand new, but we'd like to get those performance reports out before we make that ask.
Okay, great. Well, I think there's a lot of enthusiasm up here, provided it turns out the way we kind of felt it, that if we find some dollars mid-year or we plan for next year. I'll leave it there.
Thank you, Ms. Cunningham. Mr. Carantonis.
Thank you, Mr. Chair. To the discussion of what is described as communications rebuilt, because this is a completely different term, right, than just resize or otherwise modify. So I think I agree with the chair that we need to have a discussion, because we need to understand what really the plan here is. We also need to understand more in depth what happens with the 4 employees that we have there. I mean, this is a significant change. So I reserve for later. On the public art, to me, the public art program is a significant tool. And it has only 2 modes. One is it works, and the second is it is dormant and somewhere in the ICU. I believe that's right now it's the ICU. I may be wrong. I would stand happily corrected, but it takes like forever to get a public art project finished. I mean, here in the entrance of this building, it has been like, it was due like last year or something. And it isn't. And I believe that this is a project management issue and an enterprise delivery focus, lack of focus issue. And I just would like you to elaborate on that, whether there are more restructuring rebuilds that need to happen there. On the fees, I think that for the organizations, and correct me if I'm wrong in this, for the organizations who take out, who use these facilities and who will use 3,700, which also is a little bit of a late delivery, I believe that for them the most important part is to have a predictable fee, to know exactly what it will cost, and whether. And that raises the question whether the right way to price this is with an hourly fee per position of what is needed. I know that different things are needed in different places. The alternative process, the alternative model would be to say, okay, this is per hour of the facility, and you don't need to care about everything else. That creates a better. Probably, I'm just speculating here, probably a better distribution among those who can afford more and can afford less. I don't want people to begin to not to be able to afford it anymore and therefore lose them. One of the parts of the success of the of last year's arrangement and before is that we still could support a lot of organizations and individual artists.
All right, I'm going to go back real quick to public art, and I will say that this has been the legacy program, and its creator, quite frankly, who just recently retired, Angela Adams. We are right now, I'm going to say, taking just a bit of a pause and a beat to look at how do we best use this program given the existing assets, because we have, by the way, a huge collection of public art in the county. How do we energize what we have? How do we really make and continue to invest in maintenance to keep that vibrant? And then how can we be innovative about what comes next? And right now, most of the public art, we don't do temporary placemaking with public art funds right now. Mm-hmm. Is that something we could do in the future? That's one of the things that our team wants to look into. So more to come on that in terms of, yes, we recognize that right now we've got a frozen position, but we are still looking at how do we best what does the public art for the future look like? And that's something we're taking a look at right now. When it comes to fees, and Josh, I don't know if you want to come to the table for a moment, but the good news is we instituted some fees last year, and I think all of the users in terms of predictability have kind of settled in and understand what their costs are. With the additional costs that have come in this year, we actually had one of the users come and sit down with Josh this week and just kind of say, hey, how do we get to a smaller number? And so they worked it out. They basically said, we're not going to do as many performances at Gunston. We're going to use Theater on the Run. So we're working with the organizations to make it so that they can still use the facilities. It's not a huge financial burden, and it's still supporting what they need in terms of the facility and rehearsal spaces and performance spaces. Josh, do you want to add anything on the arts, or do you have a follow-up question?
No.
I mean, the only remark to that is the goal of trying to be cost recovering there is to be able to sustain and make the facility, make it available. So it's the whole point is to increase the use rather than to make it more difficult to use it, right? I mean, to disincentivize use. And you know better because you deal with, I know that arts organizations come in many shapes, forms, colors, and abilities, right? Mm-hmm. And for me, there is, kind of a smart equity algorithm kicking in, which says those who are, I don't want to drown those who, I want to exclude those who can, afford it least. I want to find still a way to get them in. And those who can afford it better to have them contribute a little bit more. And I think that we are struggling with this as a model on how of service delivery there. That's just what I'm.
Does that lead to a question for Josh or a follow-up? What's best?
Yeah, that can be followed up later. I mean, I know that's a little bit more complex than it's not just a fee for what an electrician or a stage engineer costs. It's about who do we want to serve there. besides, of course, the public. How do we empower organizations? How they understand that we have to cover costs, because otherwise, we will all together lose the assets at the end of the account, right? My question is, how do we do it in a progressive rather than a regressive way?
Thank you, and Josh made it to the table, so if you want to share insightful thoughts, go for it.
I think that Mr. Caratonis said that very well. I would summarize that by saying that what he's describing is a long-term transition that we've been slowly making. From the original surcharge, or the what's known as the incubator model, which included a surcharge for service at 10%, and then a lot of the other services that were provided really at no cost. And the changes that we're making here, I think, or the tension points rather, are organizations that have built their business model around that old system that are still with us. And so how do we make those changes strategically and slowly, progressively, like we've done last year by implementing the subsidy, and then finding other ways to support those organizations, as you say, that maybe are not necessarily able to navigate as well, through rethinking the idea behind the incubator, if not the tactics. And so we are exploring those things right now. We've had some very productive conversations, and I think that will be a continuing process in the year ahead.
Thank you.
Just to put in a little footnote on this. So last year, for example, we decided that the art truck we can do without. I'm not too sure that this paid off. The art truck was present in so many events. I mean, I would have loved to see that at Luke, for example, and it makes a lot of sense. It was a relatively small amount of money, relatively. There's nothing small here. So that's the question of whether this was a good decision is still lingering with me.
Thank you.
So this is why I'm saying this is how I'm approaching that.
Thank you. You'll follow up. I guess you got to add the art truck to the fees in general, and you have the conversation ahead of you. Arlington Economic Development, you've stayed here a long time. We are in danger. We got to get done by 6:30. We may need food in the interim. So thank you, Ms. Angie, and the entire team. You can stay, but you do not have to stay. I hope you have a good afternoon. Our next area is Human Resources Department, and if the Human Resources team, if they're upstairs or wherever they are, if they could come down to the table, that would be great. Thank you, Ms. Flanagan-Watson, Ms. Angie, and the whole team.
This is DMF.
Oh, my apologies. Mr. Schwartz, is it DMF or is it HR?
Isn't DMF stuck with us?
Human Resources, you are next, if that's okay, because DMF has to stay. So.
They should go eat, is what they should.
But of course, if Human Resources is not here, they're here. Okay, great. Mr. Kushner or Mr. Sure.
Great job today.
Thank you.
Delicious. I know, I was there very briefly, but it was lovely.
Mr. Schwartz, it's over to you, and then I believe Ms. Foster and her team.
I'm going to turn it over to Marcy, and if you want to introduce your team and then get underway.
We'll be done by 6. We'll try to be faster, but. Okay.
We could also.
Ms. Foster.
So, good afternoon, everyone.
Good afternoon.
With me, I have Jason Drake, Tamara Galliani, 2 members of my staff. Sitting back here, we have Andrea Garner, Dina Navarra, and Shannon will be handling the slides for us.
Thank you. We go to the first substantive slide, I think.
Okay, Shannon.
I won't go down, sorry.
Go ahead.
My chair is like, get the high chair.
Good, bruise your legs going under the table.
I know. Sorry about that.
Okay, so the mission for human resources is to provide leadership and expertise to attract, develop, and retain a high-performing workforce. Our goal is to make sure we get the best and the brightest here in the organization and retain those as well. Next slide. Human resources provides services that include services to employees, managers, retirees, and candidates. It's not limited to just benefits and pay, but it involves training, mentoring, coaching, career development, employee engagement, and employee-manager relations. Next slide. I'm going to have Jason talk a little bit about equity.
Okay. So over the last fiscal year, sorry, thanks. Over the last fiscal year, we had 19 in-person trainings with over 300 participants in those 19 trainings. Those are all optional trainings that people can take. And then through LinkedIn Learning, we had access to 348 trainings that are available 24/7. Really proud of our employee resource groups this year that we're able to put on 60 events, probably a little more than 60 events through the 11 ERGs that we have.
Next slide. Climate, some of the climate initiatives, some of our benefit programs support our climate initiatives. So we maintain our transit benefits, including our bike walk benefit, our Live Where You Work grants, and our flexible work arrangements. We've helped coordinate with the Climate Policy Office and the County Manager's Office to support countywide training. And internally in HR, we've been able to reduce mailed communications. We've been relying on digital guides when we can, and we try to work with electronic tools to make sure those are available in our training and our classroom activities as well. Next slide. Support for constitutionals. We treat our constitutionals as if they're one of our department heads, so they get the full gamut of services that we offer. So we're involved with recruiting, classifying positions, making sure the duties and the pay are aligned. We offer our retirement plan and our retirement planning services, job and pay analyses, benefits communication, benefits administration. They participate in all of our benefit programs. PRISM support to their staff, including onboarding through the one-stop portal, payroll processing, and any assistance they need with the payroll system. We work with their liaisons and their timekeepers to make sure they're trained and up to date on staff issues. And we provide training programs, mentorship programs, performance management, coaching, employee relations. And I know there's some MOUs that we're all considering to work with them going forward. Next slide. So for the HR department, we have expenses that have gone up just below 1% and a slight reduction in our FTEs for the next fiscal year. Next. We are freezing one of our division chief positions. The position's actually been vacant for a little over 12 months, but we haven't been able to fill it because of budget concerns. So that position will be frozen, and we're eliminating a partial FTE that would work as one of our staff resources in one of the many areas that we have in HR. And we have some reduction in non-personnel expenses. Next slide. Impacts that could be felt around the organization. We're able to redistribute duties, but resources are really, really tight. So we've moved things around as best we can. We do have some staff that are key staff that are not 40-hour employees. So as long as we have the capacity and they have the ability, they'll step up and work 40 hours for us. We may not be able to continue that going forward. It reduces our ability to support our clients, which are our customer base, our departments, working with the liaisons. We have fewer HR liaison meetings where we can train staff. We may be doing fewer benefit consultations. The phone calls may back up a little bit from time to time. So it cuts on resources that we can provide assistance and train our staff so they understand our benefit and pay packages. It may also cut back on offering services to prospective employees, explaining benefits to them as they consider coming and joining the county. Next slide. This is the partial reduction. Again, we can move resources around as best we can and ask people to step up and work additional hours. That may change going forward because we may not have the capacity to do that. And it may impact our outreach activities. So doing fewer job fairs, doing fewer benefit education sessions, some of the auditing that we need to do internally may be impacted, and fully supporting collective bargaining. Next slide. The dollars that we cut are more in the areas of some of our contractual services, so we will contract out less, cutting back on printing and mailing, so fewer mailings going to our retirees, keeping them informed of changes in their benefit programs, and a little bit of reduction in training and travel for our internal staff. HR reductions over the last 4 years are nearly 9 FTEs. So that is, hard to move things around when we've been moving things around for a few years. That doesn't mean we didn't get additional FTEs, but when you get additional FTEs, they come with additional work. So the additional FTEs we gained were in collective bargaining. Next slide. The PRISM Plus stabilization. So PRISM Plus, I know you've probably all heard a lot about PRISM Plus. So there are some pros. We probably don't talk about our pros that often, but again, it's one system. So when you join the organization, in the past, we had one recruiting system and one payroll system. So the two systems didn't talk to each other. That is one system now. So when we put an offer out there, that employee can automatically be onboarded and their information will move right into the system. We're moving some of our retiree information into the system as well, so there's more data available to do analyses with. There are lots of people looking at this system. We in HR may not have all of the knowledge on how to make changes to that system, but we have added a new hire who is really quite good at doing this. We have Oracle helping us. We have external consultants helping us. It's just not as easy as it might appear to the naked eye, but we are trying. There's future potential with the system, so once we have the time to let it stabilize a little bit, we can do more with automation, more data analyses, more self-service. We can create workforce development programs that we haven't been able to create in the past. On the con side, you might hear us say it's the way Oracle works. Some things that seem really, really simple to fix are not that simple to fix. So we say, doesn't this happen to other employers? And Oracle will say yes, but it's on the list of things that they need to get fixed for their whole population. It's a continuous learning thing because we always want what we used to have, and sometimes what we used to have is no longer available. So it's continuously teaching people that some of the things do not function the way they used to in the past. There are more frequent changes being rolled out by Oracle, so there's more people involved in getting the updates out there, and there's more people involved in testing. But that takes time, and that takes people away from what they would normally be doing. So even though it sounds positive that there's more initiated changes that are proactive, it does take a lot of time to get those in the system and tested. We have a long list of wishes. The whole county probably has a long list of wishes, so it takes a little while to get those wishes through the whole system, including the testing of those wishes, but often the departments have requests that are unique to them that don't work across the whole county, so it does queue up. And we do need subject matter experts to do the testing so that we can understand that the system is working. We don't want to roll it out live without it working properly, so it does take a lot of resources internally to make sure that that happens. Going forward for HR, some key considerations. Like everybody else, we have loss of experienced staff. Probably 25% of our workforce in countywide are eligible to retire. We don't know when they will, but they are eligible to retire. Our customer base is getting larger. We have more retirees than ever before. In fact, our retirees equal our active workforce. So we're spending as much time helping them understand what they have as the employees coming on board and the employees working here. We need resources to help adapt, and maintain our new technology, and it takes our current resources away from their work, as I've already mentioned, to get that done. Collective bargaining takes a lot of resources, and it probably will take even more resources going forward. And we have an increased need to educate our workforce about their benefit package. We have a great benefit package, but people need to understand how it works so they feel like it's of value to them. And it gets more and more complicated because the federal government often has things to say about benefit packages. So there are changes that come down from the federal government that we have to make sure people are aware of. So it takes a little bit of time. What we would need, if there was a wish list that we could add our name to, is we would need additional FTEs. We really need, with a loss of 9, we really need to regain some of them so we can deliver some of those services that we just mentioned. We've got a lot of data quality, a lot of testing, make sure the information that's going in is good information so we can create good reports coming out. Consumer education, making sure the staff and the candidates understand that benefit package, making sure they understand how to use the multitude of health benefits that are at their disposal, making sure they get the best one for their family. Collective bargaining will take more resources, as I mentioned, and then workforce development, trying to create the training programs that they can benefit from and grow and stay at the organization long term. Any questions, or you want us to just keep going into?
Forge ahead, please. Thank you.
Okay, so the workforce investment. Tamara's going to talk a little bit about compensation.
Sure. Can you? Yeah. I'm also very high up, as we mentioned earlier, so hopefully it's working okay. I wanted to start with our total compensation philosophy. Gives us a framework to provide pay and benefits that are competitive in the region. Next slide. And then when we talk about the region, we're normally talking about Alexandria, Fairfax, Prince William. We often pull in Loudoun as well. And other comparators when it's appropriate. So this is a slide that shows you where our comparators are on pay this year. You can see there's a variety of different things going on with COLAs and merit increases, and we're kind of right in the mix there, which is on the next slide. Our pay proposal. We're proposing to move the mins and maxes, which is the range, 3%. For non-bargaining employees, and then also a 3% pay increase for those on open range if they meet expectations. And then there's a budget of 3.25% for those on pay for performance. And then the bargaining employees are all getting increases that are in their agreements, 3.5 for SLT. It's an average of a little over 11 for police and a little under 11 for fire. Next slide talks a little bit about recruiting, which has been a little bit of a roller coaster for us. We had a few years of a really tight labor market. And then last year we saw a 55% increase in applicants when the federal government kind of did their thing. We have a little drop off from last year, but it's still well above what it was before that happened. So we have, for most jobs, we have 100 or more applicants. We still have we have pockets of positions where we're not getting those applicants. And they're things like skilled trades that have very specific certifications and things that are needed. Some of our medical jobs we're still having some trouble with. So on those, we're doing more targeted outreach and trying to use cost-effective sourcing to get those candidates. And I'm going to let Jason talk about the next couple.
Thank you. So, as you know, it's hard to find good people, harder to keep good people. So what we've been looking at is, different ways to bring in people at different levels. So we're not bringing in all senior level leader and then they leave to another place. We want to continue to grow our people from inside. So right now we have approximately 100 employees in an apprentice/trainee type program. A lot of these are in the historical kind of trades work, lines of work out there, whether it's our multi-skilled wastewater operators down at the plant. We have control system technicians, real estate appraisers, and then we're able to kind of watch them through the process here. In addition to that, maybe pre-career, early career, we have internships. Our management interns, we had 26 interns in the cohort this last year that are on a 2-year program, and then we have 7 non-cohort interns. Those might be summer interns. They're not here for that full 2 years. And then in an effort to hold on to our current employees and try to work on them and upskill them, we are looking at career development all the time. We have a tiered cohort approach that starts at a foundational professional skills development level, how you write emails, how you interact, how you communicate, all the way through management, mid-level management, and then up into a leader's challenge cohort where they're tackling county-wide, pretty substantial challenges through the county that are sponsored by someone in ELT that kind of walk them through the challenge, and then they come up with solution to the problem. So really focusing on the career development. Next slide, please. Thank you. From an organizational development standpoint, one of the things I want to call out, I'm not going to read the whole thing there, but having training, organizational development, employee relations all work together to identify what are some of those skill gaps out there, what are some of the challenges we're having out there, and then working with training and OD to kind of address those skill gaps. We're looking at kind of a more holistic, kind of overall approach. One of those things has been performance management. Performance management quite often is a one and done, once a year, here's your review, congrats, and it's all looking backwards. By working with the 3 groups together and making sure they're kind of cohesive, they're able to look at it and say, okay, what do we need to do throughout the year through good conversation, through good performance management to develop people? And then continuing, Marcy mentioned it before, our mentorship programs. Coaching has been a hit throughout the county. These are individual coaching or team coaches that we bring in to help groups or individuals. And then the 360 feedback. And that's a great way for someone to help our leaders kind of understand themselves when maybe sometimes they have some blind spots. So those are some things we're working on in organizational development.
Okay, so now I'm going to start talking about our benefits. We're starting here with our health insurance, and healthcare costs are increasing for everyone. You can see everybody is considering premium increases this year. Fairfax actually just implemented a 15% one in January, so we are also on Cigna recommending a 10% increase, and Kaiser is contractually capped at 5%, so that's where it will be this year. Next slide just gives you a little example of someone who brings home $80,000. This is how that would impact them, this premium increase. And just Delta Dental will also be increasing by 5%. So just to give you some sense, that's a much smaller impact. It's 18 cents on the low end and around $4 on the high end for that. On the next slide, we're just talking about other benefits changes. The IRS raised the maximum for dependent care, so we're going to also do the same. Which does help those who use the dependent care spending accounts. At long last, the child care centers should be reopening this spring. I know lots of people have been working hard on that, including our partners in DES, so we really appreciate that. And then we are trying some design changes to our Cigna plans to try to control costs going forward. And I've listed some here, but we're adding or increasing our deductibles that we already have, increasing coinsurance and copays, and raising our out-of-pocket maximums. The next slide just gives you a list of the benefits that we continue to offer. I think we have a really good benefits package. Each jurisdiction is kind of looking at their workforce and what their needs are, and I think for us, this is pretty good. We're not making any changes, but people really appreciate these. And I think, for example, on paid family leave and paid parental leave, we lead the region in that benefit. And that's the end of we try to move quickly for you.
Thank you both. While folks get organized, Mr. Spain, I'll go with you first. I have just one question, just so everyone has that on the record.
Well, of course, you're the chair. Go ahead, Mr. Chair.
Thank you, that's kind. GLP-1s. They're an important drug for some people who definitely need them. And they are extended family members. Also a drug that not every extended family member of mine medically, burningly needs. And so it's my impression that changes to our plan with respect to what covers, there's a high deductible plan and a lower deductible plan. We have to align our timing on changes in our plan. I'm not a grump, you know, if you want to pay a high deductible and that's your thing, I'm not, you know, but do I understand that right? That we have to align our timing to make a change, and then we would have to figure out where the drugs are medically necessary as deemed by a provider and where the drugs are more elective, because you just turn on the TV, YouTube or Hulu or anything, and, you know, they're everywhere as far as people want to do it. And I'm not being a grump, it's not an insignificant cost for us, I believe. And so help me a little bit with, is it right that we would have to figure out the timing to make a change? And then is it also correct that we could try to discern what's medically necessary for diabetes and other weight gain things, but not, you know, there's folks who reasonably want the drug. And I'm not here to say that I don't think that's a good decision. I'm just here to say that that's a significant cost, I believe. And so I don't know who can help me with that.
So I'm going to start, and Tamara can join in. First of all, the Affordable Care Act tells us when we have to get the information into our provider.
Got it.
And so we've made a number of changes to help reduce the health plan costs. We didn't make any changes to GLP-1s, and right now we'd have to have those changes into Cigna programmed and tested prior to May 1. We have to have a 60-day window where those can be, employees can make those decisions. GLP-1s are lifesavers. They're clearly people who have to have them. The diabetics are saving lives, whether you're diabetic or not. There are some hoops they do have to jump through to get them, just not anybody can get them. We did meet with Cigna this week, could have possibly been last week, and they have their intel out there that say that the cost of GLP-1s will be coming down substantially next year. So it might be a little wait and see thing, but you know, whatever you're hearing about the $1,000 a month cost of these GLPs, a number of them are going to be offered at probably 50% of that cost starting next year. Again,
Great, if the work bears out that the price comes down and the health benefits, you know, some people think that fluoride should be in the water. And I don't know enough science to know that answer, but the timing doesn't seem to me to play out for this year, but one-time costs are one thing and ongoing costs that are significant are another thing. And so just help us not be ahead of the work to figure this out for next year is the request, because I'm not denying that, you know, there's research on the other health benefits, including not drinking, that come from GLP-1s. But I just want to help me not be behind on next year, because we can't do everything, and we want to do what's necessary. So thank you.
Okay. Well, first I'll start off by saying, Marcy, you and I, we go back a long time in my days on the Civil Service Commission. And I thank you for your service.
baby, right?
I was a little baby.
Knee-high to a grasshopper.
Yeah, knee-high to grasshopper. And I have some, little experience in HR. So these questions, I'm going to ask them, and then some of you may have to ask for the record, because I just want to kind of ask them first, because if I pause on one, we may end up taking too long. But you go back to slide 4, right? And this is just because of a space I occupied before. We had 19 in-person trainings with over 300 participants, but we have around 4,000 employees in our organization. So then my question would become, this is not budget, but like, there's a threshold, a number, right size when you're trying to reach a level of training to employees. And I don't know what our number is, but perhaps 7.5%. I don't think it's not, because that's what it kind of yields to. We can talk about that a little bit later. I want to know if we have a target number for training in different models. Second, on page 8, when you started talking about the employee services division chief, that being cut, right? And you stated that you have not been able to fill it for 12 months. Well, I'm thinking 12 months ago, I was sitting at this table, and I just want to talk to you perhaps a little bit later about, you had concerns, you stated, about the budget. So did you have concerns about this position last year? Hence is why you didn't fill it for 12 months, because it's still vacant and it's proposed to be cut. So I need to understand that a little bit more. Slide 12, you have a laundry list of folks that you've cut over a number of years. So this question is for the record, if you have this on hand, because I know there's been some challenges. Do you have some type of analytics? I know you don't have the folks from posting of announcements to the close dates to time of hire. I want to understand, how long is it taking for an individual from the time they apply for a job, understanding that you got to do all this, recruiting and interviewing, but what is the time from posting of announcement to the time of hire, right? That in and of itself is going to give me a data set, a data point that I can think about as I try to address some of your needs on slide number 12, because you may need some folks, because we just heard the increase in applications have been significant. And lastly, we can talk later about this because we talked earlier. I want to have another conversation about fellowships and internships across the government, and 360 feedback. Is 360 feedback only for managers or supervisors? Who is that for? Who's that for?
So those are departments, or certain departments will choose kind of who they want to evaluate. DPR, one of our departments, did their levels of management. Director, the division chiefs at that level. Police is setting it up right now to do all levels. So it's kind of, it's department by department right now.
Okay. Yeah. And you can do that. You can do that 360. Okay, good. That's it. So if you want to comment on any of that, you can, but what I really want to see for the record is that piece on the posting.
We do have the data on how long it takes to fill, and we'll get that for you.
Takes to fill,
It could vary by department. But
sure, that's fine. But we have, I'm sure also in that subset you'll have an average date to fill. Okay, good, thanks. Thank you, Mr. Chair.
Thank you, Mr. Spain. Vice Chair Coffey.
Yeah, thank you. It looks like our proposed compensation increases for non-bargaining unit employees puts us kind of in the middle of where our regional friends are landing. But I know we also do every year job family studies to make sure that in general we are still staying competitive. Which job families are we studying this year, and have we noticed any kind of trend? Like, are there any emerging trends of us being out of step with our region?
So we actually are taking a little break from our job family study cycle. I think it ended up being a 7-year cycle to catch up on a backlog of just individual reclassifications, some of which were identified in those job family studies. But we do still benchmark our pay ranges every year. And that is why we're recommending the 3% range movement as well, to continue to remain competitive. It's a little bit of we make that recommendation before we know what everyone else is doing, so there's always a little bit of kind of up and down. But I think we feel pretty confident that we're still competitive. Our pay ranges are still competitive.
Great, thank you. I think that is super helpful. I know the labor market has shifted a little bit, but it still matters, that people want to come work for Arlington and not, some of our rivals.
Stay.
Yes, and stay, absolutely.
Thank you, Vice Chair Coffey. Over to you, Ms. Cunningham, or Mr. Karantonis, whoever's ready, with your one question. With your questions. Yes. Or your statement. Go ahead, Mr. Karantonis.
Okay, so no statements at this point, rather questions. So one thing that I found interesting, I don't remember which slide it was, but it's a slide where it say that the applicant pools are healthy and full, including police. Remember that this really departs from the average discussion that we had the last 2-3 years. And you said also that it's even harder to retain people today. So what I read mostly in the economic press is that actually there is not a lot of competition. So the reason that why the pools are fuller, not full but fuller, is because of the economic downturn, the federal cuts. So how does this translate also to the morale of our personnel here? There is I always thought of HR of a place where you try to make a bold case of why to stay in an organization and motivate that. But this is meaningful when somebody has an alternative, right? So how does this propagate here?
So when I say, retention is always a challenge, people aren't staying in jobs like they used to. They aren't staying for 10 years and kind of working through the ladder. So we've got to come up with options. We got to upskill people while they're in place to help build this dynamic of, while this ladder might be capping out, when we see people leaving for other career opportunity, we need to give them lateral options as well. And so that's something we look at. We're looking at skills that someone's coming in with, and they might be in a job over here in HR, but those skills can easily transfer to other jobs in DES or DPR. And how are we helping them find those jobs within the county, and then upskill them to be able to interview well and take on those jobs, so they're not leaving? That's kind of what I'm looking at when we talk about retention.
Right. Another measure that, and I think that Mr. Spain just mentioned that, we hear a lot about being slow responders to applicants. So it takes a long time to process them, et cetera. And I remember in previous conversations about exactly the same issue, it was a question about how PRISM works, how the internal, how we refer people to their hiring managers, how fast hiring managers process through this. I mean, we have seen that in our own office here. I had the impression that it is really very long. We talk about several weeks, and that makes it difficult for hiring managers, makes it definitely difficult for applicants. And, in all scenarios of the labor market right now, it is really frustrating for people who apply for a job here. So what did we do in the meanwhile, now that we have PRISM, et cetera? How do we work with hiring managers to be more diligent and more responsive so that we don't hear these complaints?
Sorry, making sure that's on. I think we tend to refer pretty quickly, but most of the hiring managers are, they're all working managers. So they're all doing their own job.
Right.
Sometimes they're doing the job of the vacancy that they're trying to fill. So I think it does vary. We probably could increase the speed at which we get back to applicants. We are doing more hiring manager training as we start to get our feet under us with PRISM. But there was also a learning curve for the hiring managers to learn how to use PRISM and where to find things. And so that probably also has slowed us down a little bit. So that's something we continue to try to improve on, and we can keep working on in terms of responsiveness to candidates. I know it is frustrating when they don't hear from us for a few weeks.
Right, but in the past episode, the problem was not enough applications, still slow response because we didn't find the ideal skill sets. We were criticized of advertising in a way that's not open to invite skills to come in, but tries to surgically extract the specific, which is limiting. Today, we have the opposite problem. They have a lot of applicants, and that saturates and makes hiring managers crazy. But the result is the same. We're still not inviting people to apply and have a responsive employer here to invite them in, right?
So there are ways to screen those pools down.
That's what I'm asking.
There are ways to do that. Many managers want to see them all. quite frankly, but there are ways, there are ways to screen those down. So you can screen on desirables, minimums, you could screen on keywords. So we're able to do that, but there are a lot of managers that really want to see the whole pool. Sometimes we'll split it into two, just based on the sheer volume that they.
So not to belabor that, I'm interested to see what kind of resource HR specifically would need in addition to what it has today to actually assist hiring managers to either, expand their ability to screen more or to focus their ability to screen for, depending on the type of job, the type of hiring manager, et cetera. But I believe that at some point this boils down to what a resource is available at HR to support one or the other modus of operandi.
Sounds like you're interested in tools at some point. Perhaps it's a this budget, but perhaps it's a after this budget. Thank you. Ms. Cunningham.
I thought I would give you 25 additional questions to take us to 7 p.m. Is that a good idea?
Doesn't surprise me,
Not
Ms.
a good idea.
Cunningham.
Okay, I will follow up with most of mine offline. But I did want to hear live a little conversation about, we know, especially in our public safety partners, and I'm not sure what other divisions have sort of stood up additional recruiting offices or contracts when they were having a hard time fulfilling. How do you wrangle all those? How do we know if they were worthwhile? And how do we turn them off once we no longer need them?
And so are you talking about people, incentives, what specifically?
So and maybe I'm not precise enough about it, but I remember both in fire and police and maybe in sheriff, we had sort of dedicated recruiting resources. They had different websites. They had different marketing budgets.
Yep.
And we're trying to turn the corner on those gaps. So how do we know when we can stop spending there? And how do we know if it was valuable or not?
I think we also have a team in HR that's focused on public safety, and they work really closely with those teams that are embedded in the departments. I think those teams are good because they really are very specific jobs, and it's good to have people who understand the jobs and can give what we'd call a realistic job preview. But for example, we're also sending someone from our office to a lot of those recruiting events and job fairs, and we work really closely with them. We can look at some metrics. I don't know. I think they're valuable to have in the department, so I'm not sure we would.
I think it's if we look ahead to the next 2 or 3 years, hopefully, at least on fire and police, where we've made a significant investment, that we won't be in a dire emergency anymore. And so I'd like to figure out how we can then get back to sort of normal spend. So I'll leave that there. The other question I will have, and I'll send it separately, is around severance costs. So I know there are a number of FTEs proposed for elimination, and I'm interested in understanding what does the severance cost look like this year if we were to restore those positions within 2 years. What's the gap? We can do that offline.
Thank you, Ms. Cunningham, for that and the other 23 to come, but really appreciate it. I think that I also might try to follow up a little bit on just understanding a little bit more the DROP program, and so I'm going to need help formulating that question, just the length of the DROP program. I'm not, I don't have any disagreements and want to do right by those who served us, but I just think that would be helpful. So that's all the questions I have, despite the grumpy sound of being diatribing against the GLP-1. I'll hope that one colleague believes that there are questions worth asking over the next year on that. I think the score I saw on that was in the millions of dollars, but I'm not, I just want to understand this because we can't do everything. And so with that, we will move to our next subject and our final subject, I believe.
Mr. Chair?
Yeah, go ahead. Sorry, Mr. Spain. Thank you, Ms. Cunningham.
Okay. This is also for the record, since you were talking about exit interviews and, recruiting retention, I'm curious to know, don't have to answer it now, I'm sure there's a theme on exit interviews. If you can, just share with us perhaps what those top 2 or 3 themes are with the board, what employers are saying as they exit. Thank you very much.
Thank you, Mr. Spain, and thank you each for the work. I know that everybody has an opinion on HR, and so thank you for the grace you show us as we work to find the best talent to help serve the community. Thank you each for the work. So
So as we're going through the transition here, I wanted to tell you there's going to be even another item after DMF. I'm going to take 1 minute of time to give you a preview of our mid-year review. I'm not going to hand you any documents, but I'll give you an update on that. So
My temptation-
that'll make sure you all stay awake.
My temptation is to call that completely out of order, but I do not think that is an So
So
go
I'm
ahead.
going to turn it over to Maria. It's, Maria she would be too polite to point this out to you, but it's been many years since DMF was before the county board, and she's so excited to be here after a many-year gap. And I just wanted to congratulate her and the department. You get to see them a lot during the budget process, but they do a fantastic job on purchasing. We have Dr. Lewis with us today. They do a lot of work on accounting. We have our first popular financial report, which was so exciting. And then you get to, this is the only time of the year I let our assessor out in public. You can ask him about equitable real estate assessments. And we also have a strong internal audit program. I know you get to meet Mr. Ken Sakosha many times, and you heard a little bit about Prism Plus. And then Maria always has the benefit of working for two people who used to have her job, so she's never second-guessed. So I'm going to turn it over to Maria.
Mr. Schwartz, if I could just add, Ms. Meredith, your commitment to public service is outstanding, and all of us are grateful.
Thank you.
Thank you.
Thank you. So I know you have a lot ahead of you tonight, so I actually went through and shortened my presentation. And
You're even better.
I have a New Yorker in me, and I will go back and talk really fast. So, but if it's a little disjointed, remember, I just slashed. So good afternoon. Thank you for the opportunity to walk you through the Department of Management and Finance portion of the county manager's budget. I'm not going to actually introduce my leadership team because Mark did that, but we also have Jason Fries here, who is the debt manager, Michael Stewart, my deputy, and Emily and Richard, who you know so well. And I just want to quickly thank Verna Denchi, who's our budget analyst, and her assistance with our presentation, and CAPE team, Sarah and Ryan, who help us make our pages look prettier than just numbers. And of course, thanks to Mr. Schwartz and Ms. Cowan for their guidance and support of DMF and the work we do, and never second guessing. Today's session is a lot more than about numbers. It's about how DMF supports the financial health and the long-term sustainability of Arlington and what it takes to deliver consistent, high-quality financial management in an increasingly complex environment. As the county CFO, it's my responsibility and the responsibility of all of DMF to ensure the prudent use of county resources to maintain the financial health of the county, and we perform an incredibly important role in the county on behalf of the taxpayer and the community. DMF is the county's financial backbone. While much of the work happens behind the scenes, every county priority, every service, every capital project, what we do to protect the most vulnerable, our equity goals, climate initiatives, all of these depend on our core financial systems and controls working well. Our role is stewardship, protecting taxpayer resources, ensuring transparency, safeguarding assets, and enabling informed decision-making. Throughout the presentation, you're going to hear me talk about the team of finance professionals that does excellent work, that we are very lean, especially relative to our peer jurisdictions, and that we want to invest and are asking you to invest in ways for us to be even better and through changes in technology and internal audit. As you listen to my presentation, I'd ask you to keep two things in mind: how workload, complexity, and risk have grown without corresponding staffing increases and growth, and the excellent, important work this professional staff who are leaders in their professions do every day. This slide shows the full scope of the Department of Management and Finance, which operates with 67 FTE, real people, across several core practice areas that touch nearly every county operation. While we are often described as back of the house, as I said on my previous slide, everything we do depends on these functions working well and have highly specialized professional staff in each area. The largest function is real estate assessments with 25 FTEs, reflecting the complexity and importance of properly valuing our 66,000 real estate parcels and managing appeals. I had intended to read more about this slide to you, but we're responsible for a plethora of financial function, and in the interest of time, they're all there for you.
Next.
This team enables departments to deliver the frontline services that they do, ensure compliance and transparency, and plays a direct role in supporting the county's AAA bond rating and strong fiscal reputation. In a later slide, I'll show how these staffing levels compare to peer jurisdictions. So next slide. Arlington's financial house is strong and consistent, and this is a really important slide. We've maintained our AAA bond rating for 26 consecutive years, a distinction held by only about 55 jurisdictions nationwide, reflecting our disciplined fiscal policies and robust internal control environment. The AAA bond rating affords the county many benefits. It provides the lower borrowing costs for the county and schools, but it also enables that rapid execution on priority projects like the quickly arranging of that $150 million line of credit that we had for the Barcroft apartments, all because of the gravitas that comes with a financially sound, well-managed county with a AAA bond rating. Our history of unqualified opinions is key to our bond rating and another testament to our strong internal control environment and accurate financial reporting and healthy financial condition. We receive the awards for our budget book and our annual comprehensive financial report every year, but we shouldn't take that for granted. Significant work goes into those, creating those books each year, following the guidelines and the standards set forth by the Government Finance Officers Association. Each of these documents is evidence of our accuracy, transparency, and strong financial management. And lastly, as Mr. Schwartz said, we are very proud to have created our first popular annual financial report, which I know all of you had, or I would have brought copies today. But these standards for all of these documents don't uphold themselves. These come from rigorous control, professional standards, sustained staff effort, and they are not automatic and require ongoing investments in people, process, and technology. The next slide summarizes our 27 proposed operating budget for DMF compared to the 26 adopted budget. Overall, it reflects a modest increase in expenses of 2.5%, about $300,000, while staffing remains flat. The expense changes are primarily due to compensation increases and investments in our organization. In the next slides, I'll walk through the specifics reflected in that summary. This slide illustrates a one-time budget reduction of about $217,000. It is not a service cut or a position elimination. The reduction comes from shifting the equivalent of one DREA real estate assessment IT resource from the operating budget to a capital project where the work is most appropriately charged this one time during the implementation of the new computer-assisted mass appraisal or CAMA system, which you'll hear more about on another slide. This slide highlights 3 proposed targeted investments for fiscal year 27. Collectively, these are not program expansions, but strategic investments to help a very lean department keep pace with risk, workload, and evolving expectations. First, the proposed budget includes $30,000 for budgeting software support focused on the budget module within Prism Plus to assist with capital planning portion of the system and the budget publication process. You know, that 1,000-page budget, several hundred-page ACFR and CIP. Second, the proposed budget includes $25,000 for P-card auditing software. That's $10,000 one-time implementation and $15,000 ongoing. The team right now audits P-cards 1 month of every quarter, and we have about 300 active cardholders in any month, making more than 20,000 transactions with a $5 million annual spend. The P-card program is a really efficient payment tool and makes a lot of sense, and we're very proud of our program, but it does come with risk, and it's important that we do our best to mitigate that risk. Automating this review process by purchasing this tool will increase coverage, improve risk detection, and free staff capacity for higher value audits and continued follow-up. The tool should allow for additional months to be reviewed, increasing the amount of cost avoidance as well as reduced staff time. Third, we're proposing to restore, and this is most important, the $217,000 of internal audit contracted services to ongoing funding. You may recall that internal audit has 1.5 FTEs and is co-sourced with an external auditor. Right now it's RSM. Internal audit has demonstrated significant value, completing dozens of audits, identifying fines, supporting the hotline program, but the current funding structure has been one time for the past 2 years. And restoring this to ongoing status better reflects the ongoing nature and importance of audit work. We are actively evaluating the most effective mix of contract services and staffing, including whether a hybrid model of 1 more FTE plus specialty contract work would provide the greatest return for the county. All 3 investments are about maintaining strong controls, improving efficiency, and reducing risk in an increasingly complex environment. These are measured, practical investments that help DMF continue to protect the county's financial health while making better use of limited staff capacity. This slide shows how DMF staffing compares to our Northern Virginia peers. While benchmarking across jurisdictions is never perfect, this analysis compares like lines of business as closely as possible. The data shows that Arlington's Department of Management and Finance has FTEs, 66.5, not S, representing about 1.55% of the county's total workforce. But if you look at our peer jurisdictions, they range from 2.3% to nearly 5%, meaning Arlington devotes a much smaller share of staff to these core financial functions. When we normalize staffing across several measures, whether it's we look at it by total FTE count of the organization, or population, or budget size, we consistently rank as one of the leanest, often 30% or more below peer staffing levels. Michael and I knew DMF was lean, but we were generally surprised by how far below our peers we are, even compared to larger jurisdictions that should benefit from economies of scale. In theory, the larger organizations should be able to operate these functions more efficiently, but even accounting for scale, we are significantly lighter staffed. Accounting in particular is roughly half the staffing of its peers, budget and purchasing about 6 positions light in each area. These are not peripheral functions. They sit at the center of fiscal integrity, of compliance, of revenue protection, and risk management, and keeping things moving. While our efficiency is something to be proud of, it comes with real trade-offs. Our staff spend most of their time on transactional work, leaving less time than we wish we could spend on strategy and process improvement. Every one of my division chiefs, as do Michael and I, have a list of improvements we want to pursue, but when you spend 99% of your time keeping things going, you don't have the time for those move slowly. So we're not asking you for additional staff today. I fully appreciate and I support that Arlington prioritizes direct constituent services, especially for our most vulnerable residents. I am proud to work here. I'm proud to live here. However, we all know, Ms. Cunningham, I said this to you once before, that no one comes to the table at public comment or the budget public hearing and demands the DMF get another accountant or another budget analyst. So it's important that I give voice to these realities and these needs, or speak my truth, as you say. All right. I want to start with, and I'm cutting down this page a lot, and if you want more information, I'd be happy to share it. I want to start with talking about the county's success story around prevailing wage, living wage, and now project labor agreements. Because supporting workers, whether direct employees or contracted workers, is an important value of Arlington County. These programs have grown over time, particularly with the introduction of a better compliance tool. Prevailing wage program began in 2022. Since then, it's grown significantly. Active contracts with prevailing wage provisions have increased from 16 to 75. Workers supported by this program have increased from 220 to over 1,300. We are a model in the Commonwealth for prevailing wage. The living wage program began in 2004. We've consistently had 80 to 90 active contracts with living wage provisions. 1,400 workers have been supported annually by this program. The current living wage rate is $17 an hour, last updated in 22. We hope to review that every year to inform those discussions. Our living wage is competitive regionally, not the highest, not the lowest, and any future consideration would benefit from continuing to look at regional trends, cost of living data, and contract impacts together. Our new tools allow us to better forecast what the impact of changes will be to contracts, which has been difficult to do in the past, so that's very exciting plus. For the most part, we have found our contractors are compliant with our requirements, which is good news. When we do identify wage deviations, whether it's through the payroll reviews that are done or field visits, they're generally resolved quickly and without dispute. The goal here, obviously, is not enforcement for enforcement's sake, but ensuring workers are paid correctly and consistently. These programs represent a significant and growing responsibility for the purchasing division. They support worker protections, equity, transparency, compliance, while also requiring specialized expertise, technology, and ongoing oversight. The next page puts a closer look at who actually is benefiting from the county's prevailing wage program, focusing on workers, where workers live, and workforce demographics. While the earlier slide showed growth in contracts and compensation, this slide helps illustrate the human impact of those investments. More than 95% of the workers on prevailing wage projects live in the DMV region. You can see the breakout on the slide. Racial demographics have remained relatively consistent since the program's inception in 2022, again on the slide. These data points support two key policy goals: economic equity by ensuring construction workers are paid fairly and consistently, and local economic benefit by keeping wages within the regional economy. It also reinforces that prevailing wage program is functioning as intended, raising standards without disrupting the local labor market. The next slide is about purchasing and the evolving practices and workload. This slide shows the scope and intensity of purchasing's workload, along with how the team's work continues to evolve. It's an important snapshot around volume and complexity and what it means for this small team. When you see intake requests on here, those are not just paperwork. They're solicitations, contract changes, scope reviews, complex informal requests that require judgment and technical expertise. While the volume alone is significant, what's really changed is the complexity. And there's an increased use of alternative delivery methods. We're using CMAR, Construction Manager at Risk. We're using design build. Technology is being embedded into practically everything, creating data security, PII, and insurance reviews, as well as we're seeing the need for greater attention to liability, privacy, and compliance risks. These aren't transactional reviews. They require careful analysis and coordination by the professional staff that Dr. Lewis has. Prism Plus brought disparate external e-procurement systems together under the same umbrella. It gave us the ability to track utilization of our contracts, which we didn't have before. It was a real plus for the purchasing division. The Oracle solution didn't have a contract portal, so we partnered with DTS to develop a new public-facing active contracts portal, including an AI-backed search tool, and allows users to find contracts even if they don't know the vendor name. It replaces what we used to have as a static list that required scrolling, some institutional knowledge, and it improves transparency and usability. The accounting slide. This slide highlights the breadth and volume of work handled by the accounting division. It's a small, highly specialized professional team, but their work touches every department and nearly every dollar the county spends or receives. Purchasing, payables, supplier administration, in addition to accounting, are compliance-heavy functions, and they come with real audit and reputational risk if not done properly. Their work underpins the county's unqualified audit opinions, and which in turn our AAA bond rating. It doesn't happen once a year. It's a continual, technical, and time-sensitive work. Prism Plus brought this team and the departments better reporting, an accounts receivable module that we didn't have before for small invoicing needs, rather than Excel tracking that was done in many places. All right. Next slide. One of accounting's greatest accomplishments is also one of its greatest challenges, keeping pace with governmental accounting standards, or GASB, which issues new accounting and financial reporting standards on a regular basis. Unlike one-time projects, these GASB implementations are cumulative. Once a standard is implemented, the work continues every year in perpetuity and layers and layers. Over the past 10 years, they've implemented more than 30 new GASB standards, and with no increase in the number of accountants that we have. And looking ahead, we know that there's 10 more coming our way. Some of these are really straightforward and simple. Many of them are really complex and require new data collection processes, county-wide coordination, testing, validation of changes in the software. Next, the budget division. This slide highlights the analytical and advisory role of the budget division, and I know you spend a lot of time with this team. It goes far beyond producing the annual budget book and the CIP. The team is responsible for the development and monitoring of revenues and expenditures throughout the year, working closely with departments for making recommendations and for any course correction. They're also the reason all of these work sessions happen so well. They coordinate all the work for them. While we've always monitored revenues and expenditures closely, there's been obviously an increased frequency and urgency for monitoring revenue trends and expenditure execution with the economic impacts of either the pandemic or what's going on with the federal government. As county policy questions grow more complex, the budget staff are increasingly asked to analyze, model, and explain financial trade-offs in real time. They support the board and the county leadership by analyzing major policy and financial issues, including examples noted on the right-hand side of the slide. These analyses often require custom modeling, rapid turnaround, cross-department coordination. And this work is supported by a small team of very capable, highly analytical staff responsible for both operating and capital. The challenge for that group is balancing strategic policy analysis with day-to-day execution. It's a lot of work. The next slide is on internal audit. Their mission is to strengthen county operations, minimize risk and fraud through systemic evaluation of internal controls and operations. There's a lot of data here. I'm going to leave it on the slide for you to read. These outcomes, though, from the audits are real operational improvements. They're not just reports. You can see our most recent activity at the bottom of the slide. The key challenge for internal audit is balancing the completion of the current audit plan with required follow-up work, because we have a very limited small team. Follow-ups aren't optional. They are what ensure audit findings actually result in improved controls and practices and are required as part of auditing standard. As the county's operations grow more complex, more technology, more compliance requirements, more decentralization, the risk landscape expands faster than audit capacity. This slide, though, explains why restoring and stabilizing audit resources is critical to sustaining strong controls as the county continues to grow and evolve. I'm really proud of how the program has matured and honestly been embraced by the departments across the county. Our internal audit staff have worked really hard to help folks realize that while no one likes to be audited, they make us better. Audits make us better. And our auditors do not have a gotcha mentality, which was really important to Ms. Cowan and I when we first stood up this program in 2015. This slide summarizes all internal audits completed since the function was formally established just about a little over a decade ago. It shows the audits from two perspectives, by department and by process. And by process helps us illustrate where the risk and audit attention has been concentrated over time. By department, the audits are distributed broadly relative to the size of their operation, reflecting a risk-based approach rather than a focus on only one area. So departments like DES, DHS, DMF, and HR tend to have more complex operations, higher financial activity, greater regulatory compliance risk. That's why you see them a little bit more frequently. These audits are about process improvement and risk mitigation, not fault finding. So if you look at the audits by process, it shows where our systemic risk tends to concentrate in terms of grant and contract compliance, P-card activity, funds handling, asset management, and the auditing by process, rather than only by department, allows internal audit to identify patterns and systemic issues and apply those lessons across multiple departments. So, for example, improvements made in P-card controls, they benefit every department. So we send them out. So if we audit P-cards in one department, we send it out to everybody at the leadership level and across the finance groups, because everybody should learn from every audit. It's not just about what happened in Parks or DES. Everybody can learn from reading the results of these audits. The next slide talks about how technology has become embedded in nearly every DMF function, improving efficiency, transparency, and service delivery, while also introducing new workload and change management demands. DMF has made significant progress modernizing core financial and assessment systems. We're really proud of the work we've done in this area. Prism Plus, our ERP, now underpins budgeting, accounting, procurement, and financial reporting across the county. Recognizing that efficient access to financial data is critical for effective decision-making across the organization, DMF staff developed Arlington View. It's a homegrown enterprise financial data platform that improves transparency and analytics and provides quick access to financial information across the county. You might remember it from our County Manager of Excellence Award 2 years ago. Because we developed it ourselves, it is purpose-built to address our specific business processes and our other quirks of Arlington. Through Arlington View, managers, analysts alike can now access financial data in ready-to-use formats in Power BI and Excel, and it's saving countless hours of reporting, running, and data cleaning. There are reports, and correct me if I get this wrong, Michael, but that used to take minutes, if not hours, to run, and now run in seconds. And it is built within our existing cloud data warehouse and Microsoft tools, meaning the additional operating costs are minimal. It's really, I can't tell you how wonderful it is. It has changed things dramatically for everybody within DMF, but also across the county. DMF also continues to host Arlington Wallet. It's updated monthly, providing public access to county financials. The wallet now also leverages the Arlington View data platform, and we were able to, a couple years ago, that's another County Manager of Excellence Award, bring that in-house and save the county a significant amount of money. These tools have meaningfully improved data availability, consistency, and reporting. We are actively starting a computer-assisted mass appraisal system. We refer to it as CAMA, which will fundamentally modernize real estate assessments. We're also employing a capital improvement plan budgeting tool as part of Prism Plus right now. We're looking at a budget and publishing tool. and on. I'm going to skip that part and tell you also that we have some challenges with these advancements. So modern systems, software as a service, are wonderful, right? They bring so much to you. They bring frequent updates and enhancements, but it's on the vendor's timeline. And I think Ms. Foster probably spoke about this as well. There's significant testing requirements. There's ongoing changes to business processes, and that means continuing training, testing, and it's a lot, and it's not on our timeline. And so there's real pros to software as a solution, but there's also comes with real challenges for both the technical folks in DTS and our business staff. Well, like everybody else, we're thinking carefully about how AI might help or hurt our work. There are potential use cases in transactional processing and routine reviews that could free up some staff time. Prior to PLISM Plus, Michael and I had been exploring AI with DTS. We paused that during our implementation and stabilization, and now expect to re-engage thoughtfully with a strong focus on risk controls and data integrity. These investments help us do more with the staff we have, but they are not set and forget tools. It's just a lot that comes with them. I'm going to let Derek talk to you a little bit about real estate assessments, and then I'm going to come back with a few wrap-up slides.
Mr. Dubé.
Thank you very much. Again, Derek Dubé, I'm the Director of Real Estate Assessments. I appreciate everybody's time. I just want to say a quick thank you. It's been my honor and privilege to serve in this department for almost 18 years now. And I just want to say thank you to our county board members and to our county leadership for all the support over those years. Thank you very much. Department of Real Estate Assessments, we consist of 25 staff members. It's our mission every year to assess all real property within Arlington County at 100% of fair market value. We are on an annual assessment. DREA is within the DMF department, but we operate independently to conduct our function of assessing real property every single year. Our assessments are conducted annually in accordance with the Virginia Constitution, Virginia Code, Arlington County Code, and professional appraisal practice standards. We have over 66,000 parcels that we assess each year within Arlington County. We are currently at an assessment value of $94.1 billion for all real property within the county. That's for 2026. And this slide's showing you a breakdown of what that tax base is. 57% is coming from residential properties, which includes townhomes, condominiums, and single-family properties. 10% of that value is coming from office properties. 26% is coming from apartment properties, 2% from hotel, and 5% from general commercial, which is your smaller retail properties. Over the past few years, our focus has been on improving our performance and efficiencies by investing in new technologies and automating our processes. We've been trying to automate a lot of our processes that are front-facing to the customer, as far as online, revamping our website, going to automated applications for appeals, and a big one that's coming up is our computer-assisted mass appraisal software system that we're in the process of starting to upgrade right now. This is a big one for us, as it's going to take our old antiquated system that's been around for over 20 years and move us light years ahead as far as capabilities, functionalities, tools that our appraisers are going to have to do a better job. It's going to gain us a lot of efficiencies within our process each year. Mobile data collection is another example of how we've automated our processes and improved our efficiencies. Using iPads in the field to collect data has made us much more efficient. That's integrated with our system. And also a recent example was with our commercial income and expense forms and worksheet requests, which was for our commercial property owners. It allows them to submit their income and expense information, which I'll talk more about, directly online, confidentially, and then we're able to respond with confidential information as well. Go next slide, please. Our main goal each year and our main focus is on equity and uniformity in assessments. Fair and equitable assessments assessed at 100% of market value is our goal every single year. We're able to achieve that on the residential side by focusing on micro market analysis, which for us starts at the neighborhood level. We research and analyze every single sale that occurs within the county. We go out to that property and inspect that sale, whether it's a commercial sale or residential sale. We research all the information we can on that property, and that's done at the neighborhood level. So we're analyzing small markets, small sub-markets within those neighborhoods to make sure that we're allowing those sales prices of each geographical area to have an impact on that neighborhood itself. So we start at the very small micro market level and we grow that out to larger geographical studies. But I think it's important to, touch on the fact that we are starting at a very micro market analysis level to make sure that we're allowing the actual sales prices of locations to have an impact on those values for that location. On the commercial side, we achieved that mission of fair and equitable assessments by analyzing commercial property income and expense data that we collect every year. We send out income and expense surveys to commercial property owners. They provide us what their actual financial operating figures are, and we're able to analyze that and utilize that specific to their property, and also use that in our guideline analysis each year. We do analyze collectively across the county on the information that we collect to come up with these guidelines that will apply to commercial properties, but at the same time, we're able to take into account what's actually happening at that property and that location for that property. In looking at Arlington, our profile obviously is very heterogeneous. It's a very diverse property profile. Starting at the residential level you see within the neighborhoods, there's no two houses that are alike. It's very rare to find that. That makes our job on equity and uniformity extremely difficult when you have different levels of sales prices and different styles of homes selling within a neighborhood. It's also the same on commercial property. It's very complex and diverse in that we have a lot of mixed use commercial property that's very high valued if you're looking across the state, which makes our job much more difficult. But at the same time, I think we have the appropriate measures in place to address that, which I'll show you later. Our main goal, again, is annual analysis of and making sure that our consistency levels are there across the board. And I'm going to get into some statistics that I've listed on the bottom to highlight how we look at uniformity and equitability through statistics. The first one there is assessment to sales price ratio. This is comparing the current or most recent assessment to the most recent following sales price. We follow those every year, whether it's commercial or residential, just to monitor where our assessments are in relation to what's happening after we've made that assessment. And I'll get further into that in the next slide. Sorry, can you go back? Thank you. Coefficient of dispersion, that measures uniformity. It shows us how our median ratios are arrayed around the median itself. So it's a big measure of uniformity for us. Price-related differential is a measure of vertical equity. It measures our assessment levels at the highest value down to the lowest value across the board to make sure that our assessments are in line and equitable. And then again, the commercial guideline analysis allows us to analyze income and expense data for different commercial property types and make sure that we're keeping those in line and equitable across the board. Next slide, please. Each year, our assessments are independently reviewed by the Virginia Department of Taxation, the Board of Equalization through the appeal process, and most importantly, the Arlington property owners themselves, which we actively engage all year long, I'm sure as you know, and that's what we're here for. Transparency, customer service, responding to anybody that reaches out to us, trying to get our information out there, meeting them at the homeowners association meetings, whether it's realtor meetings. I know Mark doesn't let us out often, but we try to get out there. We try to get out there, and a lot of it comes our way. Our volume in Arlington County is very high for the staff that we have, but our staff does a great job in responding to that. And again, we're always here and available. So our assessments again are reviewed by the Department of Taxation, which is what you're seeing here. And I'll get a little bit into the statistics and try not to go too far into them. But these statistics are from the assessment to sales price ratio studies that are conducted by the Virginia Department of Taxation. In looking at this, I've explained what the ASR is, which is comparing the assessment to the sales price. That's a big indicator of where your market's going. It is a data point. You have to understand that assessments lag the market. We don't try to predict what the market's going to be, but when you see a sales price and you say, why aren't these levels at 100%? It's because our assessments have been appreciating each year, and these are based off of data points that have occurred after we've made our analysis. So this is showing you what our starting point is. It's showing you that, this is where we are, and we're going to come in, we're going to inspect these sales. We might make adjustments at the property specific level, or we might also make adjustments on the neighborhood level, which has happened over the past few years. But this essentially shows us our starting point across the board. And real quickly, the International Association of Assessing Officers, which is considered to be the leading authority on property tax assessments, has set the appraisal standards, and their accepted level for median ratios is between 90 and 110%, which you'll see there in the fourth column over. The first column is Arlington County's median ratio, which includes commercial and residential properties. That's from 2018 to 2024. That's the most current report, and these are published on the Virginia Department of Taxation's website. The third column is showing Virginia's median ratio. There's 133 jurisdictions, 95 counties, 38 cities within the state, and this is showing you the median ratio for all of those jurisdictions within the state. And when I was talking about the IAAO standard that they've set, that's the fourth column over, is showing you how many of those jurisdictions have fell within that prescribed standard across the state with their median ratios. And you can see, where Arlington's median ratio is in comparison to that 90 to 110%. We've consistently fell within that standard. You can see over the post-pandemic years, obviously we went through some market changes, rapid price increases. Keeping up with that is very difficult. I think that's very telling when you look at the third column over on where other jurisdictions' ratios have gone. The chart on the right tracks that, our ratio compared to other jurisdictions' ratios. And I think it shows how consistent we've been over the years in keeping up with this, the adjustments that we make and the research that we do. Another big statistic that I've talked about, the coefficient of dispersion, is assessment uniformity. The IAAO standard for that is between 5 and 15%. The lower the better. You can see our COD there in that fifth column over, and how consistently that tracks. And then another big one is price-related differential, which is assessment equity. It's ensuring that your assessments are equitable from the highest value property down to the lowest value property, and making sure that those are in line. The standard for that from IAAO is 98% to 103, and you can see where we fall on that chart. So in summary, Arlington County's real estate profile, again, is one of the most complex and diverse to manage. And I'm just very appreciative of our staff and the high volume that we have and the ability that we have to do it. We are greatly looking forward to this software upgrade. It's going to do a lot for us. It's going to allow us to catch up to our current volume, have better tools and analytics. So I can't stress enough what a job this is going to be to get us there. But we're very excited to take this challenge on and take us into that next phase.
All right, I have just a couple more slides, and I'll try to race through them. The next slide is on our focus on equity and DMF. I'm going to start on the right side of the slide. It shows how DMF is operating the county's equity resolution, not only through policy, but through day-to-day practices, training, and outreach. Our goal is to ensure that equity is embedded in how we budget, purchase, and assess, and not treated as a separate initiative. So starting from the right, you can see under operationalize, we've incorporated an equity lens directly into the budget process, helping departments ask who benefits, who's burdened, who might be missing. Real estate assessments is operationalized in terms of its review of vertical equity through statistical analyses, as he just mentioned, to ensure that assessments are fair and equitable at all pricing levels. The purchasing division has been especially active in organizing and operationalizing equity, particularly through outreach to small women-owned and minority-owned businesses. Examples, there's several on the slide, but Dr. Lewis has partnered with AED and BizLaunch to help businesses understand how to work with the county. The team has participated in regional and statewide events with minority chambers of commerce, and there's been targeted outreach to nonprofits and historically underrepresented vendors. The goal is not preferential treatment, but reducing barriers and increasing access to county contracting opportunities. We've also focused on normalizing conversations about equity within DMF. We've been very active in this in the past several years so that it becomes more natural conversation and part of how we think and operate. Highlights of some of our own internal activities include the Nelson Mandela International Day Program, which prompted some meaningful discussion. The former associate director of photography with the Washington Post is the husband of a DMF DREA employee, and he spent time with Nelson Mandela on the day he was released, and he shared his photo presentation of that day. We had some good discussion. A department-wide briefing was also held by Mr. Dubé and his deputy, Mr. Bailey, on housing disparities and the history of discriminatory practices in Virginia, tied directly to the work of real estate assessments by both our, and we also had Marymount University come in on the same day to talk about their housing disparity work. On the climate, on the next slide, this slide highlights how DMF supports the county's climate commitments through, we're working in partnership with Office of Climate Policy to complete a new environmentally preferred purchasing guide, policy and guidebooks, nearing finalization to help ensure people are buying buying the right types of things. It'll create a practical operational bridge between climate policy and day-to-day buying decisions as best we can. Real estate has worked with many others in the department on the solar tax exemption credit, which was effective last January, and DMF does significant telework, which reduces commuting-related emissions. DMF plays a role in everybody else's in terms of structuring, financing, embedding climate considerations in procurement. Next slide. This is meant to just give you a quick sense on all the ways DMF supports the county's constitutional officers, work that is often invisible but essential to their ability to carry out their state-mandated responsibilities. While these offices are independent and constitutional in nature, their operations rely heavily on central finance, accounting, purchasing, and budget support. DMF provides the financial backbone that lets them focus on their core missions. Next slide. If there were more money for DMF, if that was the case, then there's no ask in front of you today, but these priorities reflect where the pressure points are after years of operating extremely leanly and where some small investments could significantly reduce risk or improve effectiveness. I'm not going to go through everything I had planned, but I would say that first and foremost, we would invest in more training, which is a force multiplier, not just for DMF staff, but for the staff that's across the organization. No one comes to work wanting to make a mistake. Everybody wants to do the right thing, but financial policies are complex. Systems like PRISM, which aren't always 100% intuitive, especially if you don't do it every single day, and training people once is not enough. So we would definitely expand our training program. We also need additional staff in accounting and budget and procurement, as you've heard. I won't belabor that. The last slide is on a capital budget request for the CAMA system. So this system was originally implemented 20 years ago. It was supplemented by a custom homegrown system built more than a decade ago to fill gaps. And despite all the staff ingenuity, this system is not well integrated with GIS. It lacks modern analytical reporting and workflow functionality. It requires a lot of manual work. And put simply, it's just reached the end of its life. So the new CAMA system is going to do all the great things that Mr. Dubé just mentioned. It is a generational leap forward. The total project cost is $2.25 million. It's the second year of a 2-year implementation and funding. While the project fully appeared in prior CIP plans, it was delayed because we had a full management team change, and you don't enter into a major systems implementation until you're in a steady and ready state. And so we held off until Derek and his team were all in place. That is all I'm going to say about that for now. So I tried to go fast.
You did, and we're in good shape. It's always up to the board to be in time so we can have a touch of dinner and then get ready by 6:30. I may have questions later. I'm grateful for the integrity you've shown. I think every board member eventually has a time when they interface with Mr. Dubé, and I'm really grateful for the integrity you showed while also tolerating some questions. And then I'll show my age by mentioning the name David Stockman. He lied about numbers and sold out our deficit in 1980 and 1981. And many people, including my dad, spent his life working with an organization that said, tell the truth with numbers. And so I never feel that with our DMF department. I feel your commitment to equity. I feel your commitment to climate. I'm grateful for the prevailing wage work. And history has shown that Mr. Stockman was intellectually vapid. So that's my heated comments. You may have been 5 or 6, I'm not sure, Vice Chair Coffey, but yes, it was 1980, 1981, 1982.
I was not alive.
Oh, sorry, my apologies. I'm revealing my age. I was 9, but I learned all about it subsequently. Sorry about that. So I don't have questions, but that doesn't mean there isn't pieces that I could have questions about. I open the floor to colleagues. You didn't know David Stockman was going to come up. Go ahead, Ms. Cunningham.
I'll keep it brief and probably send in some questions separately, but most of all, just a huge thank you, not only for what you do during the budget season, but for the integrity and care and just awesomeness that you deliver throughout the year. I was at the National Association of Counties recently, and one of the folks from Tennessee was saying, that they are really struggling because if their legislature continues the way they are, they'll be out of business in 3 years. And I was like, what happened? Like, well, our debt service is 35%. I was like, whoa, of our budget. So we are in really good shape. Yeah, I almost had a heart attack. But I would say, things that I would like to talk about going forward are, our overall risk management posture. I know that you guys think about that in the background all the time. And particularly succession planning for the department. I know you've got the resilience of having multiple previous bosses around, but we need to make sure that 5 years, 10 years, 15 years from now, we're in really good shape. And then finally, on the budget book and budget scenarios, I'd love to, over the next year, do some thinking about visualization and how we can move that forward. It might be 2 years, frankly, given the year that is ahead, but when we can. That's it.
Thank you very much for the questions, and we'll sort through whether that is where that fits as a Ms. Cunningham following up and you following up, and we'll figure that out together. Mr. Carantonis, and then Mr. Spain.
So I think you merit all the accolades. You really merit that. So this is an amazingly well-run department. I should say 55 out of how many? 3,500 or so? I mean, probably even more if we count cities. I mean, just counties is 35. So we're top less than 1%. Far less, actually, if we count cities with that. So congratulations. I know that this doesn't grow on trees. It grows on hard work. I have I'm absolutely impressed by the fact that the effort that got us to Prism Plus and now created Arlington View. Thank you for naming that after a famous neighborhood. Arlington Wallet was very interesting. It's a very underappreciated public tool that actually is very insightful for those who are listening outside of this room. One thing that I still don't understand completely is, so the accounts receivable module is still in the wish list. It's not, no, it is, because it says if we had more money, we would have
We would have another accountant to help support it, because we absorbed it with no additional staff.
Excellent. For a moment, I misunderstood that. So thank you for clarifying that. And for our assessors, this is an amazing data set that you're handling, I guess, very complex, et cetera. It also shows things that are very policy relevant here, because if we could see what you see on the map, the productivity of different parcels, the per acre tax return of every place, this gives us actually the real public benefit, the benefit for the entire community of the added value of every parcel in Arlington. I would be very interested to see whether there is any product of that kind of regularly visualizes that. To give you an idea, there is a company out there, it's called Urban 3. that uses this kind of data to help local governments see actually their tax base, to see what parts of the area work better, where investments pay off the most, where investments pay off the least, and what the contextual factors of the valuation is. Here, for example, you said there is no place that's the same like the other. It's the comparison is always a complex set of parameters. One of the important parameters is also context. So, for example, if a property is close to public investment, like, for example, metro or so, like here, this has contributed a lot historically to the valuation of this, of the assessment valuation of this property. So for us, at some point, this is important to see, because one of the weaknesses of the system is that we have a very regressive system. I mean, you know, everybody pays the same, and we are trying to figure out what the future of that is. And being able to dive into your data set would be great now that it's more easily accessible. Thank you.
Thank you, Mr. Karantonis. Mr. Spain.
Yes, and you can get back with me on this, but thank you so much. You said at the beginning, and that's in your slide, that DMF is the county, you're our backbone, and I believe that. On slide 15 and 16, and we can get back to this later, in your internal audits, you had some complaints that came in, of which there were some findings. Maybe it's out there, I just don't know where it's at. Those findings, those 31 findings in FY 2025, are they publicly available?
Every one of our
Yeah,
audits,
Yeah.
except if there's sensitive content, like technology, are on the public website. Every one of those findings is, every one of our reports is published.
Okay, I'm gonna need some help. I wanna look at those. And then on slide 16, just looking at the count between 2015 and 2026, the audits performed by departments in the process, what triggers an department to get audited? I noticed some of them are 1, some of them are 2. Can you talk me through that?
Would you like to, Ken?
You go through all of this.
You have to come to the table.
Sorry.
They may not be able to hear you out at the.
Well, he's coming up, JD, Mr. Spain, there's, you can
JD's
see
fine.
on our website.
Sure.
Every audit.
Yeah. So
back.
even these, all the ones, all the way back to 2015?
Yes.
Good, okay. What trick, you were going to ask the question?
It's got to do materiality, prior experience, their internal controls that are present, and other variable factors that affect. So that's why you see DES so high, because of the materiality factor. Then you take the risk. The highest risk we have right now is contract compliance. So whatever those departments are that have a high material contract with certain type of contract provisions that are higher risk, we focus on that. So it's all based on a whole comprehensive risk assessment we do every year.
Thank you. That's all I have.
Thank you, Ms. Coffey.
I'll just say I'm not going to ask any questions, but it doesn't mean I don't really value the work that you all do and appreciate it, but thank you.
And I would tag on to that with the following thought, which I hope gains agreement from colleagues, which is we understand being efficient, and we understand the budget that we're in this year, but do not sleep on coming to us if you need additional FTEs next year. I'm not committing, but I'm not,
We're gonna have so much money next year, right?
and I'm not in a space to say we'll have a ton of money, and I'm not saying that I would per se oppose. I'm saying we're about to get an update on how bleak
You're
our
much
budget.
nicer than I am. Right?
But in any event, I do want to add, just from the entire board, thank you to DMF and the 66 employees who try to make our values align with our budget. Thank you.
All
Mr.
right,
Schwartz.
so I'm going to try to summarize 8 pages in 80 seconds. You'll get the 8 pages tomorrow, and you don't even have to write this down, but this is the 11th time I've come for a mid-year analysis. This is the first time I've come and said, I don't have any money to give you. I need you to give us money. We are $11.5 million short. for where we thought we would be when the fiscal 26 budget was adopted. So we're going to recommend filling that hole in two ways. One is dipping into that $11.1 million contingency that's set aside, not fully, but about around $9 million, and then dipping into our self-insurance reserve. Now, if we were stopping the conversation there, that would be sad news. But we're also going to recommend that we move the $5 million from the Barcroft repayment back into a contingency for your use. And also, we'll talk separately, I want to talk to you separately about the opportunity for us to recoup some payments that are owed for us on a particular site. I'll talk to you all about that. So we'll be borrowing out of that contingency and then putting some money back in. But normally this time of the year, I usually say there's additional revenue for you to spend in the budget process. That's really not the case. Thank you.
Thank you, Mr. Schwartz. I see your light, Ms. Cunningham.
Just a quick question. Is schools also affected, and is that
Yeah,
included?
so what we've done is we've assumed on the revenue shortfall, consistent with the conversation we had 2 days ago, that schools will be contributing, I think it's 3.8 million dollars, as Mr. Hawkins said, that they'll be contributing to fill part of the hole. So we haven't included that in the numbers I've talked to you about, but it's part of, you'll see it in the memo.
Great, great. And they confirm that they have ability
Yes.
to cover that.
Yes.
Thank you.
Just to clarify, so that the 11 million you just shared is county only?
It's county only, right. There's
And then
an additional
4.8 that is additional.
3.8 from schools that they'll have to contribute to filling that hole.
Okay, so about 15 million short.
Right.
In total between the two.
Right.
Okay.
Now, and the other thing is, I'm going to say this, is that we're giving you, we're at the end of March, and we're trying to hit a target that we won't know for sure and absolutely sure until sometime in August. So it's all an estimating process.
Thank you, Mr. Schwartz. I see Mr. Karantonis, you're there.
Mrs. Schwartz, you already hinted at our school's work session that we would be in this territory. The one tax revenue that wasn't very clear was a business tax revenue. Is that accounted
Yeah,
for?
so our BPOL receipts, right now, they're doing well, but we're not at the end of the total calculation. We should probably have more information for you on that before you adopt the budget, okay? Now, I'm going to just say right now, I'm pretty comfortable that we're going to hit what it is that we had in the budget, but that doesn't mean we will. So we'll be back to you probably
Now you
after
sound like
everybody
an
takes spring
economist.
break and all that. We'll be back probably by April 10th, I think, because when you have to wrap up and do your, Emily's giving me the stink eye, so, all right, April 14th.
Thank you, Mr. Schwartz. We will be receiving that memo on Monday or later?
We're going to try to give you the memo tomorrow because I know people want to, people are going to take a breath and try to start thinking a little bit about wrapping up. So we'll try to get that to you tomorrow.
Thank you very much. More work to do. That closes this work session. We will be back here at 6:30, colleagues. I think there's food.
23 minutes.
6:30 to listen to our tax rate hearing, but for now, we're closed on this work session.